Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Investments Talk. Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
पास्ता, फ्राइज, ब्राउनी 700 रुपीज।
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस। प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस। प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस। प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस। प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस। प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए?
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC लाइफ, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC लाइफ, सर उठा के जियो।
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब 1 महीने का इंश्योरेंस प्रीमियम।
खुद बनाए।
यस, प्रीमियम भर दिया टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC Life, क्लिक टू प्रोटेक्ट लाइफ के साथ। HDFC Life, सर उठा के जियो।
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने।
Hello everyone, welcome back from the festive break. We hope you could relax, rejuvenate, and of course celebrate. And welcome to another day of Business Standard BFSI Insight Summit. We are down to the last three themes: insurance, mutual funds, and banking, today, tomorrow, and Wednesday. And with multiple sessions with industry leaders, these 3 days will be full of insights. In insurance today, we start with a keynote by Mr. Nilesh Sathe, former member of IRDAI, followed by a panel discussion with heads of general insurance till about 6 p.m. We will then take a very short break and come back with a new session on life insurance. We'll take a few questions for the panelists after the initial discussion. Please send them in the questions box on the website. For social media conversations, use the hashtag BS_BFSI. May I now request Mr. Tamil Bandyopadhyay, our consulting editor, to start the day.
Thanks, Manish, and hello and welcome back. Actually, we took a break of Diwali break, so welcome to the second phase of Business Standards Mega BFSI 9-day 11th episode summit. Today is the insurance day. Very good evening, good afternoon, good morning, depending on which part of the world you are joining us. We have two sessions, first one on general insurance and second life insurance. And before that, may I invite Mr. Nilesh Sathe, former member, IRDA, the Insurance Regulatory Authority in India, to give his keynote address.
Yes,
Over to you, sir.
Thank you very much, Taman. And thanks, Business Standard, for hosting this summit year after year, except I suppose last year they could not because of pandemic. This is, there are general insurance and life insurance, both. There will be two panels which will be discussing. General insurance panel will discuss on reinsurance, that is insuring the insurers, and the life insurance panel will discuss the post-COVID effect on life insurance. Very relevant topics, and I compliment Business Standard for conducting this program. Insurance is critical for the development of economy. Economic reforms of 1991 laid the foundation of foreign insurance players to venture into Indian insurance market. Since India changed its gears and took the path of LPG, popularly known, which is liberalization, privatization, and globalization, the economic growth has been phenomenal. The economy has, in fact, come a long way in the past 2 decades, and the transformation is incredible. We are poised to move ahead from the present almost 3 trillion USD economy to 5 trillion USD economy in the next couple of years. Insurance industry is not lagging behind. Insurance penetration has been increasing year after year. In life insurance, it has crossed 4%, while in general insurance, for the first time, it has crossed 1%. It is certainly low as compared with developed economies or even as against world averages. But the silver lining is that when it is on decline, In many developed jurisdictions in India, it is increasing year after year. It also indicates that there is still a lot of scope for the insurance industry to grow. Let me substantiate this statement with some data. While insurance premium in India has been steadily growing at over 8% per annum, the global increase has been less than 0.5%. India's share in global insurance market was over 2.7% and has been growing increasingly. One significant difference observed in emerging countries like China, Indonesia, Russia, India is that share of life insurance premium is much higher than the general insurance premium. In India, life insurance premium accounts for nearly 70% of the total premium, while in developed countries, it is below 50%. General insurance penetration is higher than life insurance penetration in USA, UK, Australia, etc. Since 2000, when private players started operating in the insurance sector, the number of offices increased 5 times. The number of employees increased to more than 5 lakh. Number of agents went up from 6.50 lakh to over 25 lakh. Capital increased from 5 crore to over 28,000 crore. And last but not the least, the AUM went up from 8 lakh crore to over 40 lakh crore. We have seen many challenges. We have seen many changes in the insurance products and processes in the last 20 years. Unit-linked insurance plans have become quite popular. Many different distribution channels have been introduced, right from brokers to IMF, to web aggregators, to digital marketing. Repositories have been extensively used by new age policyholders. Sandbox initiative is receiving attention. Awareness, affordability, and technology-driven ease of doing business and ease of access to customers have acted as key enablers for insurance industry in India. Technology is the key changer. How easy it is now to buy travel insurance or a vehicle insurance. It's all just at a click of a button. Remittance of premium is by credit card, debit card, NEFT, or through wallet. No need to go to office, stand in serpentine queues and spend time. Annuitants need to submit their existence certificate periodically. We have seen the crowd of senior citizens in banks in the month of November for submitting such certificate. Government servants and family pensioners have to go to bank to submit such certificate. But it is no longer so for the annuitants of life insurance companies. It's all online through app. What a revolution. Parents of the present day millennials may be remembering the event of buying insurance when the agent, after multiple visits, would have convinced them to buy insurance. Then filling up the 4-page long proposal form, handing over cash or check, going to doctor for undergoing medical, and then waiting for months for getting a life insurance document. The new generation has all these processes completed by insurance companies while he's at home. He compares the plan features, zeroes down on the insurance company and its premium, goes online, submits details, and pays first premium online seamlessly. If the sum assured is beyond the non-medical limit, a physician and a lab technician visits the young prospect and completes the formalities. Within a few days, the policy is sent to him on email, which he can keep safe with one of the 4 repositories. The parent of the young man probably might have a trusted agent who used to do all the legwork. Now, even the agents have become techno-savvy. and have embraced new technology. It is now possible to insure nearly everything at ease, from the expensive mobile phone to covering cyber risk. Advent of eKYC and Aadhaar card have further simplified customer onboarding and verification. Insurance business is full of complexities and challenges. While I will come to the challenges slightly later, let me first talk about the complexities. Every time insurance company thinks of showing exponential growth, the promoters need to pump in more and more capital. Solvency ratio has to be above 150%. You cannot invest the way you like. IRDAI has stipulated stringent investment norms for insurance companies. You need to invest in government securities. At least 50% of the investable fund has to be invested there. The yields on government securities have been steadily coming down. Insurance companies undertake long-term liabilities, but the market has no matching asset instruments. This results in asset liability mismatch. Then there is a reinvestment risk. And above all, the insurance company has to be solvent all the time. All this results in the reduction in yield or IRR for the customers. Despite these complexities, the insurance sector has shown phenomenal growth and is truly a sunrise industry. The industry will show a double-digit growth in the next few years for the reason that GDP is likely to grow and disposable income is likely to be on the rise. Domestic savings will continue to be on the rise. It's always seen that as the income levels go up, insurance penetration increases. Moreover, India has highly favorable demographics. Approximately 40% of the population is currently between 20 and 49 years. Low social security cover, coupled with increasing life expectancy, will also fuel the need for insurance. Approximately 40% of the population is currently uninsured. And as the level of education increases, the general awareness about insurance and its benefits will also increase, providing further fillip to the demand. There is a significant opportunity to increase distribution reach. Bank assurance, brokers, IMFs, corporate agents, other alternative channels, including MISP, online, direct sales, are still at nascent stage in India. In France, over 90% of the insurance sale happens through banca. It's still not in double digit here. Although private insurance companies, especially which are promoted by banks, are having substantial amount of business through bank assurance. But overall, when we go by data, it's still hovering around 10 to 12%. Considering the reach of bank branches, there is huge scope for banks to increase insurance business. Even for people who are insured, there is significant undercoverage. For example, against the thumb rule that a person should be insured for at least 6 times of his annual income, we find that in India, hardly any person opts for such coverage. Increasing savings rate and understanding the importance of term insurance will help industry to increase the per capita insurance. In the last couple of years, we have found health insurance emerging as a blockbuster. The premium collection from motor business, which hitherto used to be highest, is now replaced by health insurance. Cost of medical treatment is skyrocketing. COVID has helped people to wake up from slumber and look at health insurance as a necessity. Insurance companies, despite increasing losses, have honored their claims. Insurance companies have settled over rupees 500 billion claims last year. Health insurance premium would potentially account for 40% of the gross written premium in years to come. Next few years will witness a major shift in the offerings from simple reimbursement of hospitalization products to solutions that cover disease management and wellness. There are a lot of wellness apps which insurance companies are linking to their own customers' database. And there will be some discounts on observing the how the customer's health is going forward. Personal insurance will evolve significantly with the addition of new products beyond auto, vintage car insurance, art insurance, surety insurance, etc. will come into the market. Similarly, life insurance market could see the emergence of variable annuities. Government has taken many welcome steps to help insurance grow. The first being introduction of PMJJBY and PMSBY. 2 lakh cover available for a small premium of rupees 330 for natural death and another 2 lakh for accidental death at rupees 12 has been received very well. Although the initial claim experience was too bad, it has improved steadily. In order to encourage insurance companies to promote the product and quickly settle claims, government one time had announced that losses in the scheme will be made good by the government. Unfortunately, till date, no such losses have been made good. But the good part is that a large number of eligible citizens are being covered, and since the renewals are hassle-free, the persistency is high. Data shows that over 5 crore persons are covered under PMJJBY and over 12 lakh crore under PMSBY. PM Fasal Bima Yojana and Atal Pension Yojana are other initiatives of the government. Government has announced listing of LIC of India on stock market. Government is likely to generate over 70,000 crores through this investment. 2 other public sector insurance companies, general insurance companies, are also likely to be privatized. FDI in insurance is increased from 49% to 74% after 5 years. With all these positive steps being taken, a question may come to the mind that why still the insurance penetration is so low? Are the insurance companies not doing enough as expected? I think that increasing penetration is not the responsibility only of the insurance companies. It is the responsibility of all the stakeholders. Government has to ensure that GDP grows, employment grows, and per capita income increases. Charging 18% GST on insurance premium is atrocious. In the absence of any social security available to public, to the citizen, insurance becomes a necessity. And all essential commodities are out of the purview of GST. Why should premium be taxed, and that too so heavily? Nowhere in the world one has to pay such a heavy tax on insurance premium. There is no such tax on banking services or mutual fund services. These are also financial services. There is no reason why insurance services should be taxed, and that too so heavily. Even the premium for purchase of annuity attracts GST. A couple of things which government has to do and look into, in my opinion. One is replacing the regulators at appropriate time. IRDAI is headless for the last 5 to 6 months. Members' positions are vacant. Institutions weaken if not manned on time. The solvency ratio of public sector insurance companies fell below stipulated level a couple of times, but no urgent steps were taken to immediately pump in additional capital. This shows clear apathy of the government towards the sector. But despite all this, the sector is growing phenomenally. It has adopted new technology. We have seen that during pandemic, the offices of insurance companies were not closed. They were operating from home. And the IT services which were provided at that point of time were really remarkable. Actually, when you have to allow employees to operate from their home, it indirectly means you have to open so many offices because the IT infrastructure will have to be built in accordingly. But I'm very happy that the insurance companies did all that, and that too seamlessly. No frauds were reported, no leakage of data has been reported, and all credit goes to these insurance companies. A couple of things more that are required are sharing of fraud data, decline cases data, suspicious claims data, etc. We have seen that after Section 45 was amended in 2015, there have been a couple of cases which are suspicious. I won't call it a fraud, but they are suspicious because the wording of section is such that a culprit can take advantage of that wording and get his claim settled. Usage of artificial intelligence and data mining will help the industry to reduce leakages. Rather than competition between the companies, I think what is important is cooperation. And the insurance companies should join hands to have a common database, as is there in case of mutual fund industry, where the data is kept at one place and you can have mutual fund investment in many mutual funds, but you can get the statement through NSDL or CDSL in one go. Insurance is a need, and let us spread it to the nooks and corners of the country. I again wish the panel discussion very fruitful, this summit a grand success, and I again compliment Business Standard for having this summit year after year and inviting me for a keynote address. Thank you very much.
Thank you, Sathe sir. So that's Mr. Sathe, always extremely lucid and extremely candid. In fact, he has snatched away certain points which I wanted to discuss, already flagged off. One is this critical GST part, and I think the way he said, I'm not very sure whether the panelists would later, even if I provoke them, probably they will refrain from commenting that insurance industry is growing despite the government. He said the government apathy. So anyway, great. Thank you, Sathe sir, for your again extremely lucid and candid commentary. So welcome to the first session on general insurance. So we have 4 very large players. Let me introduce them. Ananda Roy, Pure Play Health Insurance, Star Health and Allied Insurance. Then we have Bhargav Dasgupta. I'm going alphabetically. ICICI Lombard. We have Rakesh Jain of Reliance General Insurance and Tapan Singhal of Bajaj Allianz General Insurance. So welcome all of you. Let me just take a minute giving the background of because this is the first session, so general about in this insurance industry and the penetration level which Mr. Sathe touched upon. And then we'll go on our discussion, roughly about 1 hour. We'll take a few questions also. So insurance industry, India has 57 insurers, out of which 24 are life insurance companies and the rest are general insurers. That's point number one. All of us know that LIC, which is preparing for its IPO, is the sole publicity company in the life insurance segment. In the general insurance, there are 6 of them, and there is a national reinsurers, GIC Re. What's the market share? Market share in the general insurance market of the private sector increased from close to 48%, 47.97% in fiscal year 19 to 48.03% fiscal year 20. So 48%. I don't have the latest number. And life insurance segment, LIC hold again is the big chunk. Life insurance premium in terms of premium underwritten is close to 34% is the private sector. And finally, I come to the insurance penetration. Now, insurance penetration, as all you know, it's the benchmark is sort of percentage of insurance premium to GDP. Now, Indian insurance penetration, combination of life and non-life is 4.2%. Life is 3.2% and non-life is 1%. What's the global average? 7.3%. And what's the sum of the markets which are much more than India? Taiwan is the highest, 17.4%. South Africa, 13.7%. US, 12%. South Korea, 11.6%. UK, 11.1%. So these are the all double-digit penetration. And closer home, China, in the Asian market where India also operates, 4.5%. Compared to that, India is 4.2%. That's it. So welcome to the first session. I'll ask all of you and we'll go by, again, alphabetically. We'll start with Ananda Roy and then Bhargav. Essentially, when you talk about insuring the insurers, it's not technically reinsurance you're talking about, but basically the state of affairs in the general insurance industry in the COVID world, particularly driven by the COVID claims. I mean, how do you digest the loss? Now, I understand that COVID-related health claims are coming down, but then there is a dengue, malaria, and other things have come up. And there is at least 25,000 crore. I read Bhargav Dasgupta talking somewhere between 25 and 30,000 odd crore COVID-related health claims. So, how do you tackle this? What is the scenario? What is the way forward? That's the general comment. Maybe 3 minutes each, 3-4 minutes, whatever you want. We'll start with Ananda Roy of Star Health. Ananda, welcome.
Thank you so much, Tamal, for having me on this panel, and good evening to all of you. So let me put this a bit in perspective. As you rightly mentioned that the insurance industry has paid close to 30,000 odd crores in COVID-related claims over the last 1.5 years. And as Sathe sir put it, also very, very correctly, the sector has been, standing shoulder to shoulder with the public, with the insuring public at very, very challenging times, especially when, there were a lot of doubts whether COVID is actually covered under insurance plans or not, or whether it is an act of God. And there were debates about it at the outbreak of the pandemic way back in March 2020. But the insurance industry players all came together and stood up and said that, no, we will cover this. And the regulator was also very clear about it. And we have seen how this has panned out over the last 18 months, while bearing very, very extreme solvency pressures on their own balance sheets. All the players have come forward and stood with the public. So how does an insurance company insure itself or protect its own business plans? If that is the question, as a pure play health insurance player, I would like to limit my comments to the health business, and which is especially very, very relevant in the current times. Couple of things, one is we are struggling with a party which does not have any regulator, which is the healthcare operators, and I think that is an area where all the players have to come together. The entire ecosystem has to come together in the larger interest of the public, because we have seen a lot of misuse and lot of unwanted attempts being made to overcharge the public, and as a result, the insurance companies have also suffered a lot. And some amount of discipline has to be brought in the healthcare ecosystem, so that, you know, in the future, whether it is a dengue outbreak or a chikungunya or any other disease for that matter, the public is paying the right price for the services they are availing from the service providers, especially the hospitals. And the second point is, you know, I would like to mention here is standard. You know, the industry is also working on some kind of health exchange standards. Hopefully that will take off and become successful, wherein data sharing on frauds, on areas where there are a lot of, you know, misuse of insurance and frauds. I think that will be another area of interest, which probably all the insurance companies will come together successfully, and that will be a big step forward in making this industry itself more and more viable. I think these are the 2 points that I would like to touch upon right now. Probably I can circle back at a later point of time after hearing the others. Thank you so much for this opportunity.
So thanks, Anand. Now let's go to Bhargav Dasgupta. You are a general insurer. Health is one part of it. You are other segments as well. So tell us, Bhargav. I mean, how do you protect yourself? And is it raising the premium? The consumers need to pay more. That's the way forward. Please.
So no. First, let me start by thanking you, Tamal, and Business Standard for inviting me here. It's a privilege to be here. Let me build on some of the points that you made, Ms. Sathi made, and what Anand just now made, without repeating some of those points. The fact of the matter is that health insurance or any insurance is a pooling of small amounts of premiums, which is used to pay a few large claims. And conceptually, a pandemic is uninsurable because in a pooling mechanism, a lot of small premiums come together to pay a few claims. But if many people claim, then the pool starts failing. And that's the challenge in insuring a pandemic. But as Anand said, we as an industry, I think took it in our chin. We stood together and stood tall and said that we'll support the society at this point in time. In spite of these very large amounts of claims, which was not priced into our products, just to add to the point that Anand made, we did not reach out for any support or any help or any fiscal help from anyone. And I think that shows the sense of responsibility of the industry. I think just to build on the point that Anand made, I mean, there are many ways to solve this, right? One way to solve this is what you're saying in terms of increasing premiums, because if the pool becomes unviable because of high claims, then the pool has to be, in a sense, replenished by increase in premium tickets. And if you look at the health inflation in this country, roughly, in the low teens or mid-teens, you need to have those kind of price increases. But there is another way of solving this, and I think that is largely the area that Anand touched upon, which is to focus on the cost side of the equation, rather than look at the cost increase and a premium increase, which risks taking our country in the direction of the US healthcare system, which nobody would, in the right senses, want them to. I think the other way to look at it is to address the core issue of healthcare inflation. And the other aspect to focus on is to look at the fragmented nature of the healthcare ecosystem. Indian healthcare system is a inverted pyramid, right? I mean, normally you first go to a GP and then the GP directs you to go to a specialist, and the specialist decides whether you need a surgery. In India, if you get a stomach pain, you rush to the hospital straight away. There are multiple tests, some necessary, some unnecessary, that are done, and it increases your overall cost. I think the overall health care delivery system needs to be addressed if you want to solve this problem at a national level. One very positive step that we're seeing, that we are very supportive of, is the digital health mission and the health passport system, the Ayushman Bharat digital health ID. That's a very positive development in terms of moving in that direction. And I think from the policymakers' perspective, our request has been that look at this aspect. If there are standard packages for COVID lab test, there is no reason why there couldn't have been standard rates for COVID treatment, depending upon the severity of the patient's illness. And those are areas that the policymakers can work on to ensure that we don't unnecessarily have to increase premium rates because the cost is going out of control. Again, I'm staying, focusing on the health side because this is the topical issue, and this is where we got hit badly as an industry. And I'll come back for any other comments.
Yeah, thanks, Bhargav. We will, as we move along, we'll get into the other granular beats, the micro things. So let me bring in Rakesh Jain of Reliance General Insurance. Question remains the same. I mean, both Bhargav and Anand made very critical point that probably raising premium is not the only option to remain in business. There are other way of doing it. One could be overhauling the entire healthcare delivery, but that's not your domain. Then the government needs to step in. Yeah, over to you, Rakesh.
Yeah, thanks, Aman. Thanks for having me. And following, I think, Anand, Bhargav, Sadesa, I think it's important for us to see this as a part of evolution. India, we have been talking insurance penetration has been growing, but it's been growing behind a lot of step-up events. And I think this event will mark in everybody's memory for a long time in various ways, not just in health, but also in various other classes of risk, which we have always been in the last 20 years struggling to create. I personally feel that in a nascent stage, most of us have been looking for a simple solution. And if you see as a healthcare policy, health insurance policy, it's an all-risk policy. So, once, people said, is COVID covered or not? And people responded saying that it's an all-risk policy, will cover COVID. Then I guess matter was rested. The question which we need to order is, are we really looking at a peace of mind kind of a situation? Or are we looking at specifics, one-offs, few diseases like that? And this, I think, is like, an approach which people need to take. I think government regulators need to put. Structurally, I think both the approaches may evolve because you will have all types of people with economic, resources at their disposal. Frankly, I feel the amount people spend on health insurance, at least the people who are buying, it is a very fragmented portion of their income, except, what obviously the government, which covers the bulk of the population today, that also gets funded through taxable resources. We have a health cess, which has been there for quite a few years now. And I think resources in this direction are now defined to be used. So I would rather presume that this trend, at least for the next foreseeable future, will continue because the larger goal is to get people on board. Larger goal is to give them quality healthcare. And I think in this endeavor, insurance companies should form as a mechanism. Hence, premium increases should be linked with the goal and should not be isolated and seen. Because, that way you are truncating somebody outside the system. And as insurers have stood in this and taking heavy penalties, and I think shareholders have funded that money, I'm sure, you would have seen all health insurance companies, which are obviously monoline companies, doing only one line of business. At least multi-line GI companies could show some resilience through diversification, but monoline companies clearly had to scramble to raise capital. And had it not been a country like India where the prospects are good, I guess capital raising itself could have been a Herculean task. So I think insurance should be seen as a part of evolution as against, discussing it. And our goal should be to have a unified approach. I think a policy needs to be put down. I think, as Anand said, an ecosystem needs to be created. The health regulators, the hospitals, all of the people should come together. And I think that is how this task will be achieved. So these are my opening introductions.
Yeah, thanks, Rakesh. So I think it's music to the ears of the consumers that I thought all of you will talk about. First thing is this: we need to raise the premium, but you are not saying that. You are saying no. We need to approach it we need to see it in a different perspective altogether. So it's great to hear that. So last speaker, Tapan. Again, we are going alphabetically. Tapan Singhal, Bajaj Alliance. Over to you, Tapan.
Thank you, Tamal. Pleasure speaking, and I think I have amazing panelists, so they have covered all the interesting points. But I am reminded when I was a kid, my father would tell me, be careful of yourself. The only person who will destroy you is you. And I didn't understand all that stuff there. Today, when I look at the industry, I think, we don't ask for reinsurance. The only person who destroys the industry is the industry itself. Industry from 2007, when fleet pricing happened, a combined ratio which has been close to 115, 120% all these years. I don't know what are we talking about when we say, that 1 year we had COVID claims. Has the combined ratio actually shot up real crazy? If I look at it, still somewhere there. Like what has been there for like past 14 years, if I look at the overall industry combined ratio, is somewhere close to that. So the overall combined ratio does not show that the industry is actually, something to cry about. Because they're happy at 150, 120% combined ratio for so many years. And they have been destroying themselves in their own wealth creation or in their parameters. So I don't think they should really cry about a COVID claim which has happened for this year. That's my first comment. The second comment is, I don't accept the fact that why should the industry not ask the government for subsidy of something which the government has said, along with the regulator, that we should support. I don't think the industry came forward and said that we stand for COVID and we pay all claims. So taking credit of circumstances is also not right. It was very clear. A regulator came out with clear process on Corona coverage. Industry had to file, and they filed obviously. And there was a clear mandate that it has to be done. The government also said, no, this has to be stood by. And the industry obviously supported and said, okay, stand by. So I don't see any reason when every industry can go and tell the government that this has to be subsidized. Why should not the industry ask for subsidy for something which was a national call to stand by the citizens of the country? It's not a commercial call which was taken. Now, having taken that and stood by it, I think everybody should chip in. The government should reduce GST, which we have been talking about. When the premium is moving up because of the claim which is happening, which is a real fact, whatever is being said, the premium has moved up if I look at the industry. Then the way on the end consumer, the effect has to be made a bit less, then GST has to be looked into. Why should 18% be charged when you're talking of national interest, when you're talking of consumer interest, and at the same time you're not giving any subsidy. So it can't be that only one part of the entire ecosystem is the one which takes all the blame, is the whipping boy, and also is supposed to talk about all this right thing which is there. I think everybody has to chip in. Frauds has to be taken at a very high note. I think Anand did mention that, at a very aggressive kind of positioning, but you can't be minting money in a crisis situation, which was happening, and everybody is aware about it. But let us ask that in the past and you're such a senior editor, in the past 1.5 or 2 years, how many such fosters have been actually part of the book? Or how many such cases have been taken strongly by the state government or the central government or by the police has been taken up there? So I think it's an overall intent in how it has to be looked into. And I squarely and responsibly hold the industry responsible for the situation they're in. So I don't think we should be trying to talk about who else and who all will be ensuring that we save ourselves. I don't see from data statistics or from the position that has been taken that we should be asking for this kind of scenario. That's my view of this.
Okay, thanks, Dhawan. So it's a slightly different point of view, and so the second round will start with you. So you are not in a disadvantaged situation like talking the end, and you don't need to seek the assistance of your dad. Okay, so this is again not exactly COVID related, but it's also an offshoot of COVID. It's a very predictable thing. I'm sure all of you were expecting this. Is a digital disruption. Yes, I'm talking about the insurtech, that technology-led insurance startups, subset of a larger fintech sector. Now, what's happening? There are many startups. Unfortunately, we don't have anyone on this panel. We have in the insurtech part being represented in the second panel, not here. Pandemic anxiety sparked a near 70% increase in customers' intention to buy insurance globally. I'm talking about a Capgemini Research Institute studies. And it says that 7% increase. And it says that half of the consumer respondents stressed by the COVID crisis said they would not hesitate to switch to big techs and new insurtechs. Okay, I'm also quoting the IBEF data, India Brand Equity Foundation data. There are currently now 110 plus insurtech startups operating in India. Now, IRDA is it's headless now, but we all know about the sandbox approach. It has received 170 applications from insurers, out of which 14 applications specifically from the insurtech companies last year when it comes to this sandbox. So this is the kind of digital disruption in the entire financial sector happening, be it insurance, be it mutual fund, be it banking and all, but insurance also. So you four are all traditional insurers. So I'd ask, starting with Tapan, do you also need to reinvent themselves, or, I mean, how do you approach, Where do the traditional insurers stand? How do you live up to the challenges? Like if I ask the bankers, they all talk about collaboration. They don't talk about competition anymore. In the financial sector, that's the mantra, collaboration. So is it the same thing for insurance also? How does it work?
Okay, Tamal, 2 points of view here.
Give as much as 3, 4, whatever you want. Yeah.
First is, I think when we get branded as traditional, legacy, or dinosaur, I don't think that's the right word, no? And I can actually challenge that again by simple statement. Let us say we pick up all insurtechs, no? And I have all my senior colleagues here. So let's say we pick up all insurtechs and let's try and figure out that what is it that is being done, be it in tech perspective or something which maybe in a Bajaj Allianz or IC Lombard or a Star or maybe a Reliance does not have or is not doing, no? So I don't think that progressive companies actually wait for change to happen and then they would react. I think most companies and we actually keep on scanning it very, very aggressively to see that is it something that is not happening in terms of where it is and how it is, which is there. So let's say if I give example of Bajaj Allianz, we are shifted, in the process of shifting entire core to cloud. It's among the first in the world, any company doing that, shifting the entire core to the cloud, which would give us hyper, kind of volume transaction which can happen. So if I look at any insurtech also or any startup also, who has the core on the cloud, and would be actually shifting on that kind of basis. Or let's say if I look at claim settlement using artificial learning, machine learning, or on the go, at least for my company and watch for it, whatever I read from newspaper and I talk to, let's say, Bhargav or Rakesh or Anand, they also say they would be doing so. And when I look at insurtech, I don't find that, they have done something which is beyond in terms of what is happening. So calling us a legacy, a dinosaur would not be a right statement. It's like a perception creation. I think more realistic would be, we should analyze insurtechs and we should do that very well because we should always love when people bring disruption for the industry and people bring disruption for the consumer and see that, if companies are strong and powerful, do they have it or they don't have it? If they don't have it, then obviously you feel the chance, these companies would get into a dinosaur stage and they'll be disrupted. But I think smart companies are actually, would be ahead of the game is what I've been observing, which is the second point, collaboration. Yes, I think if you ask this question 10 years back, I would be saying they are not collaborate at all. It's my way of differentiating to the consumer. But that was an era in which your innovation lasted for 10 years. In an era when your innovation does not last for 6 months, I think the era of collaboration and creating value for the consumer at a much higher scale is what is required for existence. But you have no option but to collaborate. And we actually are doing quite a stuff. And I think it will be there, I think, between Bhargav, Rakesh, Anand, and all of us. We're creating exchanges. We are trying to look at collaborating on fraud. We're trying to put up all this stuff. So that collaboration is the only way forward. So I think the era of having individualism in any kind of business, not only about financial businesses, is gone. So collaboration is happening and is happening at a much better and much faster pace than what was happening yesterday. And I think big powerful companies also on a tech space pretty much advanced, and they have to keep on pushing them. So I think that is what the game is. You can't sit on laurels and say, okay, I've done this and now it can last for 10 years. That era is gone. So those are my comments.
Thanks, Taman. Tradition, it's a very, very interesting part. Traditionally, we found that the panelists say, don't put words in my mouth. I never said that. I never said that. Here, the moderator is saying, don't put the words in my mouth. I never said that. So dinosaur and legacy. Okay, that Tapan, you said it. I never said. I said the traditional. Okay, and if traditional, if you think that it's offensive, then I say classical insurance companies. Okay, classic insurance company. Anyway,
you invite me to a panel, you get views straight from the heart. So it's not
okay.
And politically right views.
Sure. It's all in the right spirit. So let's hear. Alphabet. I just go the reverse way. Rakesh, tell us. And when I spoke about collaboration, I was hinting at collaboration between you and the insurtechs, not among you, the traditional or rather classic insurance player or whatever. I'm very choosy now about my adjectives. Okay. Yes, Rakesh.
Tapan, the only point which I would add to Tapan's point, and I think he made a very critical point, was I think the classic insurance understand risk and perhaps they have the resources to invest also in the future. So many of the startups, obviously, their goal is not just idea, it is also to sustain that idea. So to my mind, the classic insurers have the will as well as the resources today to really create that value. Coming to the point of working with insurtechs, let me also draw a bit like how do we look at it. Insurance was always a push product. It was not something which was in the forefront in a country like India, which is a young country, or you can say people did not have enough resources to buy an insurance product. It was often not even a secondary. We used to call it when we entered insurance, it is a tertiary product. It is mandatory, it would sell, otherwise it would not sell. That is how motor insurance evolved. With this digitization, I think what has happened in my view, insurance is becoming a primary product. And many of the companies, the startups or digital companies in the ecosystem, they have realized insurance creates a great pull for their business model. And you will see various types of people experimenting now with the customer segments. They want to attract for the larger, product profile they would have in mind. But insurance could become like a lead product or a very critical secondary product for them. So I think for insurance companies, like you said earlier, banker was because you had a logical way of distributing insurance. I think the digital companies are also realizing that there is a logical way by which they can also look at insurance to connect with the customer. It is no longer just a push scenario. It is an appropriate, bonding which they want to create. And I think for insurance companies, hence insurtech becomes like an extended way of creating a conceptual promotion of your product. The thing which will matter in times to come is all digital companies will have their own way of looking at marketing and distributing. Of course, insurance companies at the back end will be risk masters. They will aggregate. They will see how to price it, how to give that quality service or a claim to a customer when they need be. But end of the day, digital companies are not going to work in a format. They are going to work in the way a consumer behavior is likely to get shaped up. And this, to my mind, is where the classical companies need to really imbibe. The good part is most of us have invested enough on digital architecture, being on the cloud, the scalabilities. I'm sure Tapan and all who have Allianz as their partner or others also. I think when I have talked with many of the global insurers also, they have found the amount of automation, digitization which India has done is much higher than many of the other countries. The only thing we lack is customer profiling, customer behaviors, which I think with digitization is going to catch up with each passing day. So I think we stand a good course in actually partnering with insurtechs on good conceptual ideas, pooling the risk in a very different way. And I think, our ability to do that is perhaps the best as we can see today.
Thanks, Rakesh. Yeah, absolutely. You actually hit the nail on it. I mean, insurance has been a push product, but now thanks to the digitalization or digitization, I mean, it's on my app and the entire thing equation is changing. Over to you, Bhargav.
So let me just add a couple of points.
Sure.
One is to build on what Rakesh said about the fact that what you call the traditional insurance companies like us, who've been here for 20 years, not that old in that sense. We've had to be in a space where we are competing on very fine margins. I mean, I'll give you a small example of a two-wheeler policy, 700-800 rupee policy. A traditional financial services entity would spend 500-600 rupees on even issuing a policy. If you spend that much money as an insurance company, you can't survive because the claim cost is itself maybe 70-80% of that, and you don't have enough margin to do that. So we were forced, because we were a low margin and low ticket industry, to digitize, and which is why what Rakesh said, that if you look at Indian market, most Indian companies who've done reasonably well, and I think all most of the large private sector companies have done well. They've been forced to digitize. So I don't think it's new for us to think about using AI or using automation or digitization or sensors or IoTs to run our business. The second point that I wanted to make is that I think again a good point Rakesh made in terms of our ability to know our customers, and that has been a challenge for our industry because we don't have a KYC requirement, and that is an area that we need to do better, and that's where all of us are trying to partner with. We have a program which is kind of a partnership model called Nova, which we've been doing for 2014 onwards, where we partner with some of these startups to do something which is unique in the market. So it's not this or that. You may compete with someone in certain space, but you also collaborate with a lot of other startups to bring new solutions to the market. Third point that I wanted to make is that insurance, in our opinion, we've been saying this for good 6-7 years, is that the role of insurance is changing from being a risk transfer company where you pay a premium and you get a claim if something happens, to that of a partner in risk management and risk prevention. So you work with the client using whatever tools, analytics, sensors, etc., to prevent the incidence of the risk. And that is the value that you provide to a customer. And that builds greater engagement, that builds more knowledge with customers. Now, to be able to do that, you have to partner. You cannot do all of that yourself, right? You don't have all of those, capabilities, all those products and services. So that's something that, willy-nilly, I think all of us are doing at different, scale. The only point that I will make is that as large organizations, the risk that we run, and we have to be cognizant of this risk, is that while we are doing all of this, I think there are a lot of agile, nimble, smaller early startup companies who are addressing the customer problem faster. They've built an internal organization which is maybe faster and more nimble. And that's something that we all, typically large companies have to be, conscious of and build for. I mean, internally, our organization have to be equally agile and nimble. If you don't do that, we run the risk of becoming what you called, you will call, dinosaurs. So I'll just bring that point back. That's the only thing that I would want to kind of flag, apart from the fact that most of these things are anyway being done by most of the time.
Thanks, Bhargav. So, Anand Roy, your turn.
Yeah, I think, looking at the contribution which this insurtech companies are doing, and also, as you mentioned about the sandbox projects, which the regulator had floated a few years ago, I think, speaking from my point of view, some of the interesting things were, rather than from the marketing side, I saw some interesting concepts from the services side, and I think the insurtech collaborations will be more fruitful on the services side, which is very, very critical, and which is one of the pain points as far as doing, customer engagements, and insurance companies are not very known to be very, very friendly. And I think that's where technology will be playing a very critical role. And I think collaboration is the right word. And probably on the services side, we will see a lot of engagements, a lot of developments using technology through many of these startups and the new, the new age companies. But as my colleagues have all mentioned, as far as, keeping up to pace with what is the expectations of the client, whether it is in product design, whether it is in, bringing about low ticket policies or short-term plans or all of that, and which can be brought on the fly. It's all available in the industry, and the industry is really adopting to the changing demands of the consumer. And I think that's not going to change. But in terms of the services and in terms of the engagement, I think there will be a lot of developments that can be worked along with the startups and the insurtechs. I think that's an interesting area.
Thanks, Anand. I just have a question of, I don't know whether this question makes any sense at all in this talking about digital disruption. Bhargav, you spoke about, you didn't say in as many, you did not use the term, but you were talking about the customer acquisition part, like 700 rupees and 500 to 600 rupees goes for customer acquisition, right? You meant that way. So what I'm asking you, like in a bank, we ask them and the bankers say that my 97% of customers now outside branches, right? In terms of customer interaction, that's internet, that's web, that's many other mobile, that's ATM, etc. So in the insurance industry, be it come the customer acquisition or the customer engagement or premium collection, etc. Bhargav, starting with you, one line each. Is there any benchmark you can say that my X% is now through digital thing? Bhargav, you start.
Just yeah, so there is. I mean, the way we look at it is how many policies do we issue electronically where there is no physical processing of the paper. And I'm looking at for ourselves at ICICI Lombard, 97% of the policies, we don't see the paper coming inside the organization. There is no data entry or anything done. So basically the way it happens is maybe the distributors using, their electronic platforms or our, distribution platforms or customers on their own do that work for us. And we don't actually, do any physical data entry or paper processing. So
Thanks. Rakesh,
that's a number for us. We don't have any data for the industry.
97%. Yeah, Rakesh?
Yeah, I think we are also about the same, about 97, 98%. The products have got standardized, processes are digitized, and I think we save our money that way. Rather, you can say that's how we make money. The other way to look at, sorry, I'm just adding the point.
Sure.
97% of the industry claims are also settled within 30 days, and I'm sure you'll understand every claim is a unique proposition. And one thing which IRDA did in this, entire lockdown and everything is it allowed also insurers to go paperless completely. Wherein there is legalities involved, there is always a bit of back and forth. So I think another good measure at the industry level will be the amount of how fast the claims are getting settled, and that's also an outcome of how the digitization.
Yeah, there are questions actually coming on claim settlement. We'll discuss that later. Yeah, Tapan, just a sentence. Yeah.
Yeah, I think what Rakesh mentioned is the fact. If you look at the regulator allowed paperless, and that's why we can probably say close to 100% we'd be all digital, and that would be true for most companies simply because regulator allowed paperless, and there's extension on that, and I think we should become completely paperless. Otherwise, if you have to have paper, then you may be issuing policies 100% digitally, but then you're sending 100% paper document to your consumer, because that's a regulatory requirement. So because of that waiver, I think you speak to any insurance company close to that kind of scenario.
Sure. Ananda?
I will just second what everyone else has said. The adoption of digital purchases is really, on the rise. But to put a number to it, we will, as a company, we would be close to around 75-80%, because being a pure play health insurer, there are certain other nuances which we have to look into. But yes, this is on the rise, and most importantly, I think the area that we are focusing on is how do we make our claim settlement more digitized? How do we ensure that the authorizations of cashless during hospitalization happens at a much faster pace? I think these are areas of interest to us, and as Tapan already mentioned, now the regulator has allowed that you can submit your documents online. You don't have to actually physically submit your claim documents in case you have taken a reimbursement claim. I think these are great steps in improving the customer experience, and I think this will only grow from here onwards.
Thanks, Ananda. Now I'm introducing one round, and then depending on the time whether we can have another round or no, or then we can take the questions. We'll roughly about 5:35, 5:55. We'll end 5:55, 5:56, so that at 6 o'clock the second life insurance panel can start. And this is the most I think everybody wants to know. Again, driven by COVID and the new realities, the new products. The other day this is nothing to do with COVID. The other day I read in one of the newspapers this insurance for unborn child for birth defects that started. Now that has nothing to do with COVID, but that's probably people have been asking for it, and now industry responding. But the global controversy or debate on the business interruption laws in UK and other places. The other day we are talking in Indian context. There are people who are talking about can you insure the job losses? Like even in the informal sector, if I'm a laborer and I have lost my job, is it possible to get me insured? This thing. So what are the new? Be it business interruption loss or be it job loss or anything else. Tell me the past since March 2000 last year, the new reality of the COVID pandemic. What are the processes have changed, claim settlement, etc. The way you have done is changed, digitalization has changed. But what are the new products that are coming up in terms of on the drawing board, in sandbox? Because the two things which I find globally and particularly in India, which is a requirement, one is business interruption. But if you call the COVID is an act of God, then I don't know, what do you do that? One is business interruption, and second, equally critical is job losses. I think the pure play health insurer may not have much to say, but Anand, you are also welcome to add like anything else. But let's start with Bhargav.
So, Tamal, effectively, there are new types of risks that are emerging. And if you look at one of the new risks that are emerging is, apart from what you're talking about, is the cyber risk. That's a cover that, estimates are it will be a $25 billion industry globally, by about 2030. So that's a big piece that is emerging. Some of us have launched those products for retail customers. The other aspect, again, staying back with health, is the outpatient cover. So, I talked about the inverted healthcare system where you first rush to a specialty hospital rather than going to a GP. As an industry, we don't cover for the outpatient in a meaningful way. We give vouchers, we give 5,000 rupee limit tickets, etc. But we don't provide a proper cashless, paperless, outpatient cover, consistently, like, let's say, what you see in the US markets. So that's something, again, is getting, launched. We as a company have launched a product for that, completely, paperless, cashless on an app. That's something that is coming through. Drones, it's a new area, new policies that is coming out, and new covers have come out in the industry. Again, not just us, quite a few companies have launched it. So our sense is that every new development in the economy, there are new risks that get created. And the beauty of the non-life sector is that any new risk potentially is a market for insurance. What we want to guard against is, in a sense, abuse and fraud. And at times we worry about some of these issues, and we worry about expecting covers which are of pandemic in nature. For, as I explained earlier, you cannot cover a pandemic. So if you have, let's say, job losses which are across spectrum at a scale which is beyond, what a pool can support, that's something that we worry about. And as I said, we worry about pricing and fraud. But apart from that, there is no reason why we can't create products and solutions for any new emerging risk as we get more and more data for that risk.
Well, Bhargav, you didn't say that, though, but probably you are not looking into either into business interruption loss or job loss at this point. That's what
we have a job loss cover already, Tamal. We have a job loss cover. It's not as if we don't have one. We already have one. So again, I think, all of us would have among ourselves different types of covers which cover some of the niche areas. Job loss we have. I just wanted to add to the commentary on some of the new areas that we are seeing.
My understanding in India, the current job loss cover is more a sort of health related thing, not the externalities where I'm using. So
it's linked to health.
It's a misnomer actually. We can't call it a job loss cover. I mean,
no, it's not. It's not a misnomer.
It's
not a misnomer. No, not at all. It's actually a loss of job cover. We have a product where if you lose your job, we will pay 3 EMIs of your loan.
Okay.
So that's a loss of job. It's nothing to do with your health.
No, I'm saying, but loss of job in relation to because of my health ground, right? No.
No, just because of your loss of job. Purely because of your loss of job.
Okay, I stand.
And some of the other companies also have the similar cover, not just us.
Okay, we'll get into that. What are the other things you spoke about? You spoke about cyber risk, other things. So Anand needs to leave. He has some other commitments. So can I bring in Anand for your a couple of minutes comment, and then you can leave. Anand, are you there? Hello? Or probably he has already gone. So it's over to you, Rakesh.
No, I think, as Bhargav said, we are all trying to work, creating innovative covers. So, of course, loss of job we always have been having with a caveat. We pay for 3 EMIs. Sometimes we also have gone and agreed to 6 EMIs. But it's not like a pure play substitution of your income which you will create. I think that is still some way to go. The second thing is, you said sandbox and loss of job. I think we created last year in the sandbox domain a parametric cover for loss of income. And, one of the things which has always crossed our mind is how do we really do it in a mass environment like India? Because you can always do a few things here and there, but it really does not percolate effectively. So we created a loss of income, like if it rains so much in a day in a Mumbai or this thing, people can get compensated for their loss of daily income, 2,000 rupees, 5,000 rupees, 10,000. Then this would be a completely digital product and people need to buy it, obviously, ahead of the event ticket. So, structurally speaking, various ways and means are coming to fill up the intent, which is to secure the customer. A lot of things are also getting worked up on, customizing health policy. You said, unborn child. I remember we used to always started health insurance with a 90-day waiting period. Then it started with, day one cover when a child is born. And today it is unborn. Because the health insurance as a segment has grown big enough to cater to incremental risk. See, on day one, many of these covers cannot be introduced because insurance companies do not have that kind of ability to spare money or resources for the higher riskier ones. So I think India still will have to create a denominator which is strong enough to foster in innovations. And that is where you will see different companies in their own way, depending on the resources, will build up these things. And maybe over the next, many years, we'll see the incremental needs of customers will get bridged.
Thanks, Rakesh. So, Tapan, your turn. So, tell us what are the new products in terms of the COVID context is actually trigger for the demand of product like job cover against job loss or cover against business interruption losses, etc., etc.
Thank you, Tamal. I think it's a very important question raised. No, so let us understand about insurance and social requirements are for large scale. And across the world, you'll watch that when you have such social issues, it's government and insurance companies which have to work together to deliver. So you can't expect the industry to deliver something which leads to losses of like trillions of dollars, and they don't put together all would have enough capacity even to pay that kind of claims. So I don't think the industry can come out with a solution on that basis. That's why the pandemic pool has been suggested. The regulators set up a body, and the recommendations has been prepared. Now, if I look at when a crisis happens, the government does dole out a lot of relief to the people of such. There are two ways to do that. One is to look at creating mechanism, and you expect that this can happen again, of a scale which can take care of this thing. It's a social issue. So we are not talking of 3 EMIs for job losses. That has been there for many years, as Bhargav mentioned, and I think Rakesh mentioned. Congenital defect will surprise Tamal is a cover which was an add-on even before 2000. It was there in very early time, 1986, when the first medical policy got launched. In the 90s, you had congenital defect cover. It's an add-on you should take. So congenital defect is also not a new cover, or let's say we type of retail cyber. It was, I think we were the first to launch it in the country. It was before pandemic also, it launched retail cyber cover. So innovation in purse keeps on happening. But right now, what you're talking about, to my understanding, is the social issue. Huge job losses happening, economic recession happening. And we watched what happened in pandemic. A lot of migrant laborers had to move, and there's a huge crisis in the country. Now, as a country, as a government, as an industry, do we come together so that next time when this happens, have we learned from it and we can offset this? Can we cover standing charges of the industry so that migrant laborers don't have to be shifted out? They can still be paid salary. Standing charges means that even the factory is shut down, whatever is the minimum charges that is there, with the employment charges or something, that is covered by insurance, standing charges. So can the pandemic pool cover standing charges so that migrant laborers or people don't lose jobs, the economy does not hit a crisis? Can be a situation where business interruption can be covered so that So today, as it is, we see a release getting rolled out by the government. Pandemic pool is a solution for that. I think it's time when we got together and solved both issues that you said, job losses in a scenario like this, or business interruption scenario like this. Some countries are already working and they're coming to a solution to this. I think it's high time India also did that.
Good to hear that, Tapan. I think you were talking about innovations. This IRD and RBI, both the regulators, the sandbox approach actually is increasing innovations, right? So let's get into something else. That's the last round, and then there are many questions. Many of them are related to it's basically customer grievances. I'm afraid we will not be able to entertain them, but we'll take a few questions, maybe 2, 3. But before that, on the policy level, Tapan, you hinted at the role of government, etc. Our keynote speaker spoke about the role of government, again, with more emphasis and how the IRDA position is remaining vacant, so on and so forth. Now, I would draw your attention to 2 things. One is this, in August, a couple of months back, Parliament passed the General Insurance Business Nationalization Amendment Bill. It's basically privatization of state general insurance companies. And that happened in August. And before that, in Union Budget, we saw that FDI limit in insurance increased from 49% to 74%. So how does it how do you react to that? And I mean, how will the industry evolve from that? In fact, internally, of course, mergers, acquisition happening. I think, Bhargav, ICICI Lombard got this final nod of the regulator for this Bharti AXA General Insurance acquisition that's got happened. That has nothing to do with this. But overall, the increase in FDI limit and the so-called privatization of nationalized insurance companies, how does it impact or give, how do you react to this? We'll start with Tapan and then Bhargav and then Rakesh, end with Rakesh. Then we'll take a few questions. Yes, Tapan.
Thank
Over to
you.
you.
I think I've been a strong believer of more the merrier. If you look at a country like India, such huge country, and the number of insurance companies just 30 plus. You know, if you look at something like US 2000 plus, Singapore in like 600 or UK like close to 1000, and we're just 34 companies. You know, I think for the consumer, for the market, I think the more the companies in any industry is very good. It's very, very good for consumers. And that's why you see innovation at a very hyper speed happening. You will see business models evolving because everybody has to do good, otherwise they will not survive. So anything which would bring in more players to the country, no, and in terms of like reaching like about 1,000 insurance companies in India is something which I'm super excited and looking forward to. I think that is something which is there. As far as the privatization is concerned, from a government perspective, they are the shareholders, so it is they who will decide on that. I don't think that has a major impact in terms of how do we look at business or the industry. That is, I think, something as shareholder looking at that company and how they handle that. But from a pure perspective of when I think about such moves and I think about that it can lead to more institutional coming in India, I get super excited because it's very good for consumer, very good for business models, very good for innovations to happen. So I welcome such kind of moves.
Bhargav?
If I step back and look at our sector, and when you look at, forget the global averages, just look at similar countries like BRICS. We are 1/10 the insurance density of China. So we have a long runway of growth, and it makes a lot of sense to attract more capital in the sector. So we've always been very supportive of this 74% FDI. If it attracts more capital and more players into the market, I think it will expand the market, and that is in the long term very positive for the industry and for consumers. The other comment that I would want to make on top of that is, as new players come in, I mean, if you see, let's say US markets, there are, the market is very large, and there are a lot of niche segments where people focus on geographically as also in terms of product categories. In India, at least what we've found in the last, maybe 12 years of fresh competition coming in is most people have come in with a me too approach, do exactly the same as what, let's say the traditional companies have been doing, with a few exceptions here and there, one or two. So I think what would be interesting would be to see new players coming with new approaches, new strategies, new models, which are not me too, and it just and the competition is not just restricted to pricing competition, but more in terms of creating more products, more channels, more markets, and really expanding the market rather than just trying to grab a share of the same small pie.
Yeah, Rakesh.
I would just extend the point made by Tapan. I think till the time India adds more people, the number of insurance policy, I think the divide is only increasing. So structurally, the more people come in means we pull in our efforts to create the awareness. And as consumers become literate or their choices become sharper, they will automatically gravitate towards the good companies, the appropriate products. And I think the price points and all will emerge out of the risk experience. So I think it's a journey, and India can afford a lot of people. I think the more companies coming with an objective of growing the market, should be actually the criteria, which I think is very likely to happen given India's potential and the huge economic surge we are expecting in the next many years. The second thing which I see as a trend is the time of having a wide ownership pattern. I don't think we can now have one single two guys owning the whole of insurance company. Large institutions, financial institutions, will be owned by multiple set of investors, people, public at large. And to my mind, that will start to create a different degree of acceptability or brand in the overall ecosystem. And this is where even companies which are listed, the companies which are large, they will carry a responsibility also of ensuring that they meet the various stakeholders. Sometimes we get conflicted between policyholders and shareholders. I think it's a misplaced notion, because I think eventually good practices of which are generally induced by shareholders goes and benefits the policyholders. If you see health insurance, you are expected to guarantee lifelong the renewability. If the companies are weak, what is the point in their lifelong? It is as good as saying your longevity is restricted to the company issues. So I think These are structural shifts which were anticipated. So 26 becoming 74 or even reaching 100 was likely to happen. Nothing untoward. We now need to heighten the objective as against the pattern. And I think this is what I see as a big trend.
Yeah, thanks, Rakesh. I think we could have gone on and on. There are many more questions I wanted to ask you. Particularly, I wanted to ask you that how do you, these are all, what we discussed is basically customer interfacing. But if you look at yourself, how have you changed during the COVID, how your operations have changed, your approach to employees, so on and so forth. But unfortunately, we are running out of time. So let's take a few questions. There are many. I'm just taking only a few for the time's sake. One question, you decide who wants to answer. Probably Bhargav, if you want to answer. This is M. Vasanta Krishna asking the question. Is the Indian general insurance industry ready for a risk-based solvency regime? Is it likely to warrant a higher level of capital?
So we, at least I speak for ourselves, we would definitely welcome a risk-based solvency model. I think we have a very archaic factor-based solvency model, which is a copy from UK. And I think its time has come for us to move towards a risk-based solvency model. Whether you need more capital or you release capital depends on your business model. I mean, if you have a granular, business which is more retail-centric, you probably would end up releasing capital. But if you have a heavy dependence on reinsurers, poor quality reinsurers, you may need more capital. So it depends on the company.
This question is not directed to anybody, but I would want Tapan to answer because you are pretty candid right from the beginning. It talks about what our keynote speaker actually addressed, that IRDA, board level positions remaining vacant, regulators not been identified as yet. So as a player, is it very frustrating for you? Kuntal Dasgupta. Yeah, sorry, that's the question from them. Yeah, Tapan.
Not exactly, Tamal. If I look at it, obviously, when you have senior leadership at any place, so they not only give you guidance, but mentorship is there, which obviously is required for an industry. But if I look at for my entire company's process, I don't think that we have had any moment where we felt that we have missed this because of this. But this question will be more relevant, I think, for younger companies or companies which have more requirement from regulation in terms of approvals or getting things in place. But I think for matured companies, it's not much of a position which is there. And so from my individual perspective or company perspective, I did not face any kind of moment where I felt, if this was there, this could have been better. So I think the question to me would be wrong. I think it would be more to a younger company. I think they would put much more appropriate.
Okay. Let me ask this to Rakesh. This is gentleman Venkat Prasanna. Is there a case for better regulation of insurance advertisements, talking about, to bring in better clarity on the product for potential clients, whatever that means? Yes, basically, this person is not talking about mis-selling, but probably hinted at that. I don't know.
I agree. Obviously, advertisements are the way by which we connect. So there is always going to be a better way of communicating. But a lot of the things today in India get confused, not just in the content, but also in the way we write, the language, and so many issues. So my personal take is we must also embed consumer awareness. We must encourage people to probe and not just look at a headline kind of thing and presume so much. I think it will be a dual effort as against just improving the quality of advertising.
This question, I don't know, any of you wants to take it, and is it covers your area of operations? I don't know. There's a perception that crop insurance settlement tends to drag on. Who is responsible for this? Is the government or the insurance company? The gentleman asking is Haywood about crop insurance. Anybody wants to?
Let's understand, Tamal, how does the crop insurance claim operate? The claim is clearly operates that when a damage has happened, and the subsidy which is to be paid by the state government and the central government is paid, then within a stipulated time, the insurance company has to pay, otherwise there is a penalty on that. It's a very, very beautifully worded document. So if you look at the document, anybody delaying it, they have to pay a penalty. So I don't think the insurance companies have a luxury of delaying crop settlement, because if they do so, they have a penalty. By the same time, to protect the insurance companies, and which is also a rule in the Indian context. You have something called Section 64(5)(b). I think you'll be aware, Taman, in the Insurance Act has mentioned that the insurance company's risk starts when the premium is paid, or claim pays, which when the premium has been paid. So premium has to come to the insurance company. Now the premium has not come to the insurance company, then again in the document itself is stated, then the claim does not get paid. And the issue of subsidy is there. I think the subsidy which is pending, I think Rakesh is there, Bhargav, I think for some time has been out of this now, which lasts for months, 6 months, 7 months, 8 months, until the subsidy comes in. The trigger doesn't happen. But if the money, the premium has been paid, then the insurance companies don't have the liberty of dealing the claim with the penalty clause which is there, very clearly put in there. So I hope that answers the question.
Thanks, Tapan. I just only can there are many more questions. Okay, well, they're coming in. So anyway, you want to answer this. If any of you want to say what kind of investments you are making in startups, like AIG has invested in a startup which provides wearable devices for workplace safety. Munich Re invested in a startup which uses sensors and analytics to monitor heating, ventilation, and improving maintenance to prevent breakdowns, etc. So Tapan, Rakesh, Bhargav, have you invested in any interesting startup? Just one line each.
Yeah, maybe I'll go. So we do a lot of these partnerships where we provide the same sensors to our corporate clients for preventive reasons, to prevent, let's say, hijacking or a fire event, or a fire protection system malfunctioning, etc. So it's something that we do as a practice. That's what I meant by saying that you have to move from risk transfer to risk prevention. That's what we do using IITs. One of the challenges that we have in terms of investment in India is that Insurance Act prevents us from investing in a private limited company, and most of the startups in India under the digital India setup are private limited companies. And secondly, we can invest only up to 10% of the capital of the target entity. So both these constrain the investment philosophy, but partnering and working with them, the answer is yes.
Okay. Tapan, you want to add anything? Rakesh, you want to add one?
I think Bhargav summed it up. I think most of us are partnering very aggressively with a lot of startups, and there are some very good ones out there. Investment has an issue. I think we're raising it up with the regulator. This should be opened up. I think the point is that why should we limit it? And I think the very good question has come through, Tamal, where people are saying that across the world, insurance companies are investing in good startups. And I think that India should also be aligned that. And the 10% cap actually is a big limitation, but then you're not actually controlling the entire ecosystem mechanism. And I also want to add one thing before close, because I strongly believe that you set a very powerful platform, Tamal, to put in the right views and get the message across. Is the ecosystem in India has to open up. Health, the regulator has allowed, I think in the product construct, a kind of wellness which is coming through, which is a very, very strong move. But I think the entire ecosystem mechanism and play in the Indian context is still very, very weak. I think regulations have to come into play for that. And that is where the next level of innovations would happen from a consumer perspective. I think that is also one point I want to make before we close the discussion.
Thanks. Rakesh, you want to add anything?
I agree with everybody. I think we are all very eager to put money. We just now need to know the consumer needs. So I think the KYC, knowing the customer, needs to be mandated for general insurance. That is the big picture. You can't really just throw off digital shelves product, presuming so many things. So I think this coming together, this, in my view, is a multiplier effect on the amount of innovations insurance companies will give.
Thank you, Rakesh. So my apology to the audience. There are many more questions, but unfortunately we are running out of time. We can't take, maybe next year. And thank you, Bhargav, Rakesh, Tapan, and Ananda is not here. He just left 10 minutes back. So what's the summary? I think it's a very challenging time, but the industry has the resilience, and you are looking, finding ways how to mitigate all the new risks, and you have the resilience to face the new challenges. But the one key takeaway, I think, right from the keynote speaker till and through the panel, I think what all of you are looking for is the larger issues of changing the entire ecosystem, where a regulator needs to approach things in a different way, and government needs to come I will not say to the help of the industry, but to understand and appreciate the nuances of the industry and accordingly address the issues. I think all of you enjoyed participating in it, and the audience too. Over to you, Manish. to announce the break and get ready for the second session, I think after a couple of minutes. Thank you all. Stay safe.
Thank
Happy
you,
Diwali
Tamal.
belated though.
Thank you, Tamal. As usual, an excellent session. Thank you.
Thank you, Tamal.
Bye.
Thank you, Tamal. Thanks to all our speakers. We will take a very short break right now and set up for the next panel discussion, which is on life insurance. Please stay tuned. We'll be back very soon.
का इंश्योरेंस प्रीमियम
खुद बनाए
यस प्रीमियम भर दिया टाइम पे
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए HDFC लाइफ क्लिक टू प्रोटेक्ट लाइफ के साथ HDFC लाइफ सर उठा के जियो
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने का इंश्योरेंस प्रीमियम
खुद बनाए
यस प्रीमियम भर दिया टाइम पे
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए HDFC लाइफ क्लिक टू प्रोटेक्ट लाइफ के साथ HDFC लाइफ सर उठा के जियो
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने का इंश्योरेंस प्रीमियम
खुद बनाए
यस प्रीमियम भर दिया टाइम पे
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए HDFC लाइफ क्लिक टू प्रोटेक्ट लाइफ के साथ HDFC लाइफ सर उठा के जियो
She has ambitions of becoming a brand. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने का इंश्योरेंस प्रीमियम
खुद बनाए
यस प्रीमियम भर दिया टाइम पे
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए HDFC लाइफ क्लिक टू प्रोटेक्ट लाइफ के साथ HDFC लाइफ सर उठा के जियो
He's making his investments talk. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने का इंश्योरेंस प्रीमियम
खुद बनाए
यस प्रीमियम भर दिया टाइम पे
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए HDFC लाइफ क्लिक टू प्रोटेक्ट लाइफ के साथ HDFC लाइफ सर उठा के जियो
He's making plans for an early retirement. Business Standard.
Pasta, fries, brownie, 700 rupees.
मतलब एक महीने का इंश्योरेंस प्रीमियम?
खुद बनाए?
यस, प्रीमियम भर दिया, टाइम पे।
Being young and responsible begins with a single step. अपने फैमिली का फ्यूचर प्रोटेक्ट कीजिए। HDFC Life, click to protect life के साथ। HDFC Life, सर उठा।
And we are back with this heavy duty panel from life insurance. Over to you, Tamal.
Thanks, Manish. So welcome back. This is a two-part, 9-day, 11-episode Business Standard BFSI Summit. Today on the 7th day, phase 2 after Diwali. Insurance Day, we just had the keynote address by Mr. Nilesh Sathe, ex-member IRDAI, and the general insurance, pretty exciting general insurance discussion. And right now, we are into the second panel of the day, that's life insurance. The subject is pretty interesting, is COVID the inflection point? We have practically entire industry is present here. Let me introduce alphabetically Mr. Kanan, NS Kanan of ICICI Group, Naveen Telani, Tata AIA, Tarun Chugh, Bajaj Alliance, Rajkumar, LIC.
Hey.
You are in the news. Thank you.
Thank you, sir.
I know. Okay. Yeah, Ashish Dahiya, a PB FinTech, Policy Bazaar. Everybody knows that. So let me say it's I think the whole co. And you are in an IPO mode. And last but not the least, the only lady on our panel is Viva Padilkar of HDFC Life. So welcome all. Our discussions are centering around COVID and how things are changing due to COVID. I was just looking at some of the facts. The initial outbreak of the pandemic and the countrywide lockdown. What happened last year? Year on year, there was a decline in life insurance business. In March, 51%, 51.2%. In April, 48.2%. I'm talking about March, April 2020. And then as the lockdown restriction eased and the digitalization rose, we find that decline was moderating and the industry registered year on year, I mean, FY21 growth is 12.1%. But then again, the emergence of second wave of COVID, we have seen that it's impacted the growth. Despite the lower base, we found that it grew only 13.2% in the first quarter of 2022. And then in second quarter, it's even further down, only 2.2%. So overall growth in the first half, again, I'm repeating, despite a very low base last year, is just about 5.9%. So this is the business context. And so first round, I would request all of you to give your preliminary remarks, and we'll start with IPRU, Kanan. What are the most significant challenges you face, the industry face? And what are the learnings from that? Preliminary remarks, Mr. Kanan.
Yeah, Tamal, thank you. Thank you for having me today on this panel. It's always a pleasure, Tamal. As you rightly said, the growth has been a bit muted during the initial period of COVID. And again, in the second wave, for some time, we had a little bit of growth challenges. But if you look at overall, I would say, maybe my colleagues on the panel can supplement this, that this is one of the industries which has been extremely resilient, Tamal. So if you look at the last year growth as a whole, it was about 12%. Despite the COVID first wave and the huge disruption in terms of lockdown, the industry ended with a 12% growth. And this year, in the first few months, it's about 6% plus kind of a growth rate. So for a pandemic, which is not, the world has not seen in decades, this kind of growth rate, I think it's good. And more importantly, from the risk management perspective, the industry has held up exceedingly well. So some of the things industry has indeed done well during this period. The challenges has been in the initial period, reaching out to the customers, because when the COVID kind of pandemic strikes and you get a lot of queries from the customers that whether COVID death is covered under the policy, etc. It was upon us as an industry to reach out to the customers and tell them that yes, COVID death is also covered, and please submit your claims, and we had to tell them what are the ways in which claims can be submitted, because moment of truth for a life insurance industry, as you know, is settlement of claims. So we were all focused on ensuring that customers are not inconvenienced at the time of moment of truth. Then subsequently, it was more about servicing through digital. The good news is that industry has always adopted digital quite well, but I would say that some of the things had to be accelerated because of COVID. And then came sales. New methods of doing sales also happened as we went along because the demand increased during this period. The fulfillment was the challenge, to talk about the challenge you talked about, because medical examinations could not be done very easily. So we had to do, as an industry, a lot of analytics to get to the profile of the customers and make it as frictionless as possible. These are some of the challenges we faced, but on the whole, I would say that industry has held itself exceedingly well, despite the pandemic, which is really the moment of truth for the industry.
Thanks, Karan. This is the preliminary remarks only. We are going alphabetically. So Naveen Telani of Tata AIA, feel free. I mean, adding new points. Did you expect anything from the government, from the regulator? Could have been approached in a different way? Anything, whatever you feel like.
So just very quickly, I agree with what Karan said. I would just make an additional point that when you look at overall growth, the numbers are what they are. I think when you look at the next level in terms of private sector versus total industry, you might find a slightly different picture. And there is a different dynamic at play rather than just the pandemic. Focusing though on the pandemic, Kannan covered everything. I just want to spend a couple of minutes on the consumer angle of the pandemic. Because ultimately we are serving the consumer. We may do whatever we want to do, but we exist for the consumer. And just coming off a research that we have done with Nielsen, a few things I want to highlight. It's obvious that the pandemic has affected the income of the consumers. And if you look at where the spending has increased, I'm going from the findings of the survey, OTT platforms, because obviously cinemas are shut down, right? Online education, of course, that's become important over the last 18 months. Online consultation and pharmacies. And number 4 is online purchase of financial products, in which right at the top is life insurance. And if you look at consumer outlook towards insurance, it has become much more focused on health insurance because of course we are worried about, hospitalization and what will happen. But equally, life insurance has become much more strongly associated with the security of the family. I think the positioning of life insurance in the minds of the consumer has moved from savings more to security of the family per se. And this is all data based on a very large sample of consumers that I'm kind of talking about. And also, Yashish can supplement this, but the likelihood of consumers to buy life insurance in particular online has jumped by more than 10 percentage points pre-pandemic to post-pandemic. So there is a desire to purchase it on your own digitally as well. Having said all this, this should mean this is a big inflection point for the life insurance industry. If I go back to your original framing, Taman, but I would argue that this is a point of time in sight. And unless the industry does something concrete about it, we will lose this opportunity. So the opportunity is there. Consumers are ready. And the question is, what are we going to do to actually respond to this opportunity, change our business model, simplify our products, make them more protection oriented, work with the consumer in the way they want to work with us through digital channels, use technology to provide a better experience, and focus on quality, which is something that, in the past, we have not kind of covered ourselves in glory. When I say focus on quality, I mean right sale, providing the right product, persistency, et cetera, et cetera. So just to keep it short, I think there is a big opportunity. Consumers are ready. What do we do with it? Depends on us. And I'm sure, the industry has been very resilient, but we should now build off this platform of resilience and get into a transformation mode where we kind of take our business model to the next level. Back to you, Taman.
Thanks, Naveen. I think I'm glad to hear that you agree with the tagline is COVID the inflection point. You are saying it is indeed the inflection point, and industry should seize the opportunities and face the challenges in the right way. We'll discuss more on that. So let's hear. Well, Welcome, LIC, India's life insurance behemoth. You continue to hold about 3/4 of the life insurance industry in terms of premiums booked. Rajkumar.
Yeah, thank you, Mr. Tamil and Business Standard for giving the opportunity to be on this panel. And good evening to all the panelists. During pandemic, basically what Mr. Kannan has said, I supplement him that there were three challenges: customer acquisition, servicing, as well as claim settlement. And the industry rose to the occasion, and new systems are brought into the place to address all these issues. Basically, the first thing was the customer services. I think the customer acquisition took for some time backseat. During the height of the pandemic, in the first phase itself, the industry was concerned about how to reach to the customer so that the policies are kept in force. That was the one challenge which to which the industry rose very, in a very good manner. The second part again was the settlement of death claims, including the IRDA also gave some dispensation that they allowed the industry to get the papers. I mean, not in a physical papers, but the photocopies on the WhatsApp and other things. All these things were allowed, and the claims were settled. And the faith which the customers had in the insurance industry was strengthened. That yes, this is one industry which rose to the occasion and helped the customers. Now the thing is the opportunities. This was the phase when the digitalization of the services, I think it got a very big push for whole of the industry. In fact, probably in Life Insurance Corporation of India also, we discovered that there are many other things which we can do through digitally, and industry as a whole also looked into that. So one more thing which has happened is the awareness among the general public about the insurance. Insurance still being a push product, and all the insurance companies, life insurance companies, have been doing their best to create that kind of awareness among the population at large. But this pandemic has pushed that kind of awareness to a very big level. But there is still a kind of a paradoxical statement. On one side, people want to have insurance. The other side, they are having the economic stress that still has not gone. And these are the two things on which the industry is looking at. And I believe that there is a time now the industry is going to have a great run in the coming days. The second phase has again impacted the insurance industry, life insurance, very badly. But I think the peak has already gone. The third phase, which was expected, is still not there, and the festivals have already gone. I think the life insurance industry is poised for a leapfrogging from today onwards. Thank you.
Thank you, Rajkumar साहब. अब जो हिंदी में बोलते हैं ना, आपका मुंह में घी शक्कर. So घी शक्कर.
सर आप कहेंगे तो मैं हिंदी में बोल सकता हूँ, कोई प्रॉब्लम नहीं सर.
We must say आपका मुंह में घी शक्कर. You are saying you are not seeing the third phase, and the worst is behind. So over to you, Tarun.
Yeah, so I'll avoid repeating whatever Kannan, Naveen, and Rajkumar have already talked about. Maybe I'll focus on a little wider perspective. So I'll look at learnings we've got, the way the industry has responded, and the kind of opportunities broadly we're seeing thanks to COVID. And I'm saying thanks to COVID because COVID has taught us a few lessons, and the learnings really are around the fact that there is a heightened perception of risk coverage in the customer base now. After, I think, the last 20 years, this is the first time that insurance hasn't been so difficult to sell. There has been a little bit of a pull factor from the customer. That's a one big thing that's come. So this incident of COVID has helped us, and as both Kannan and Rajkumar said, we've been able to service customers. We've been seeing claims getting paid, and that's kind of instituting our faith. The second learning is around the ease and convenience that the customer is demanding. And I think that's a big gap that the life insurance sector is yet to cover. Because the advent of digital and the way Naveen talked about a lot of data around that. And I'm sure later on, Yashish will also have a lot to say around this. The adoption on digital and therefore the gap that is still not digitized from the experience that life insurance provides, how difficult our documents are to understand, forms filling, all of that. So these are few that I'll mention. These are the few learnings very clearly there. In terms of how the industry responded, I'd say we've responded well on a couple of things, despite a lot of issues. So the way we've been able to sell term plans and respond to the customer, it has not been an easy ride because at the time the reinsurance hasn't been a very helpful bit. And I think aggregators like Policy Bazaar have really played a significant part also in that, in helping us spread this. We responded well on widening the bucket of needs. Initially, there was a time when ticket size and markets used to decide how the growth of industry will be, and usually ULIP and growth of the industry and the economy was a collinear kind of relationship. But that is something that has changed. And now we have a risk of living longer, risk of dying earlier. We have the risk of not saving for long enough for your long-term needs that is coming up, and both guaranteed and risk-sharing products which have been well accepted. Of course, the underlying benefit that we've all got, and we should not forget that there has been this interest arbitrage that has been there with FD rates being low, and hence guarantees of life insurance companies looking good. So that has helped us. Lastly, in terms of opportunities, I think it will be a big loss if we do not retain the learnings that we've had and be able to transform the industry further as we go ahead. And these are on various paradigms, some that I've talked about already, which learnings becomes opportunities, but also around things like work from home. The question, do we really require so many branches? Does a branch have to be so big? Do we have to be run so hierarchically? Do we really need such huge hierarchies itself? And there's a lot around how we interact with the customer. And of course, around usage of data, which I think we've not even started on the journey. So those are some of the opportunities. I'll leave it here. Otherwise, I can.
Yeah. Thanks, Tarun. Thank you. So let's. I know, Viva. I think ideally we should have started with you, but as I said, we are going alphabetically. You have to wait for a couple of minutes more. You'll be the last speaker. Before that, I'll bring in Ashish. Yeah, Ashish from PB Infotech. Tell us the challenges and the learnings from this COVID time.
Viva ma'am is alphabetically ahead of me. So I guess she needs to go first, or?
Okay. Oh.
Yeah, V comes before Y.
Oh. Okay. Yeah. I think yeah, sorry. It's my bad. Viva, sorry. Yep.
Yeah, so thank you for the opportunity, and really not a lot to add except that, where a couple of my co-panelists did mention that there is a inflection point, but really it's up to us what we do with this inflection point. I don't think that it's automatic that suddenly people are going to continue with this momentum, that the why of insurance. My worry is that it should not be like a dog at Christmas, wherein, once Christmas is over, you don't know what to do with the dog. Similarly with the policies that have been bought. So in fact, there has to be this, apart from not wasting a good pandemic, but also beyond that, innovation is key. If we rest on our laurels to say that fine, as an industry, we've come through this relatively unscathed, our solvency as a sector is relatively fine, and so on. There's not been any major hiccups for the sector. I think we would have lost the opportunity. There's still a lot to be done. I don't think fundamentally a lot has changed. Yes, optically it might look like it has changed, but just one data point. If I were to look at Google searches, say as of August versus August of last year, overall is down about 8%. Health is flat. If I were to look at term, it's down even sharper at 16% than the kind of Google searches that we were witnessing a year ago. All of this is really wake-up calls for the sector that we need to do a lot more. And what is it that we need to do? Again, my panelists have covered a lot of it, but innovation, whether it's in the form of relevant products to bring, and therein, I think some regulatory intervention would be very welcome. Today, for example, I know that general insurers are selling group term life insurance, calling it non-survival policies. So why not life insurance companies be allowed to sell wellness, health, and so on? So I think if we start having a slightly wider focus on really embedding the why of insurance, I think that is important. So that's one aspect. Second aspect is on use of technology. Use of the earlier panel talked about how do we partner rather than compete with fintechs, insurtechs, and so on. How do we also service in terms of vernacular, voice, exactly what we're seeing in terms of use of YouTube videos. Most of it, overwhelming 70+% of during the pandemic is in vernacular, the consumption of videos on YouTube, those sorts of things. So it's really looking at the obvious. And finally, on the white spaces. So if we think that we are maxed out and if we think we're only competing amongst ourselves, then I think that's all we'll be doing rather than expanding the pie, which has shrunk from where it was 10 years ago. So all of this is really a food for thought and an opportunity for the sector.
Thanks, Biba. So, on my apology, I made that goof up. Yashish, your turn.
No problem, Tamal sir. I remember in my class, there was only one person who came after me. His name was Zafar. So I'm very acutely. So I think insurance is a very, very difficult product to, for the consumers to buy and for anybody to sell. And I think we have to first start with that acceptance. Our earliest investor, a very senior person in that company, after 9 years of our existence, one day called me on a Sunday and said, I want to buy term insurance. Can you get somebody to speak to me? And so I got somebody to call them. And then for the whole day, nobody could get through to them. So I thought this was some kind of a joke. So I messaged them, I WhatsApped them. I said, you called me in the morning at 10 o'clock and you asked me to get somebody to call you. That person's been trying to contact you. They've tried it 7-8 times. They haven't been able to get through. When would you want? Sorry, I was at a funeral. That explains it, unless there is a funeral, people don't understand that they need to buy life insurance. And unless a friend or a neighbor or somebody falls sick, people do not appreciate what a person who falls sick goes through in terms of financial stress, plus emotional stress, plus every other kind of stress. So I think we as an industry have been doing a great job, quite honestly, and to be brutally honest, quite a thankless job for the last 10-15 years in educating the consumers on the need for protection, health insurance, life insurance, etc., etc. I think COVID has certainly helped. I hear, some of the data that was shared. We have a little more of that. Like we have somewhat different data also available. Demand's gone up. There's no doubt about it. Both for health insurance and life insurance. Demand today, as we see it, and of course every platform sees it differently. We see demand at about 2x of where it was before COVID happened. And I think there's very robust demand coming which wants to purchase. And while the industry has done everything within, imagine we have a large industry. We can't be that agile as anything else, right? It has been a difficult process the last 1.5 years. Please appreciate 90+% of policies have to undergo a medical. I think it was already mentioned, right? And who is going to get a medical done during COVID or even after COVID, right? It was a very, very difficult process. And I think the industry slowly has come around it. And at the same time, we were facing as an industry, the reinsurers were asking for higher premiums, and that was also going on in parallel. So I think it was a difficult phase overall. The good news is, the demand is still there, and most of us have learned out of it. And the processes are a lot more streamlined than before. We also understand a lot more about both risk as well as the processes to get consumers to purchase. I think a lot of us know the nuances of how to make those sales grow from here. But I think, I think it still stays, the biggest problem still stays consumer inertia. And that, of course, has been shifted by COVID.
Okay, thanks, Yashish. Yeah, actually, that's what from a push product, it is now getting into a different orbit, and primarily because of the entry of the big techs, or insure tech, whatever you call it. Is a technology-led insurance startups. Yashish, you are no more a startup, but you are one of the disruptors in that sense. So I would ask each of you, because this is also during COVID, this trend has become absolutely visible, which was coming in, but now it is actually shaking the industry. So what's going to happen? I'm not pressing any alarm bell kind of thing, but how are you, the existing insurance companies, the so-called traditional insurance companies, how are you seeing this, looking at the disruptors? What is the way forward? We'll start with Biva.
Sorry, was that me? Question for me?
Yes, I mean all of you would.
Yeah.
And I'll ask Yashish again. You will come in the last because you are actually on the other side, and the rest of them, including Rajkumar, they are the traditional.
If you don't mind, I just wanted to say one line.
Sure, please.
The biggest change in our company in the last 1 year is that we are opening physical presence.
Okay, good.
I just want to leave that
sure.
And kind of leave it to the panel.
Okay, yeah, Biva.
Right. So I actually see that we are on the same side. And I'm not saying this because Yashish is here. And anyway, Yashish is turning hybrid now, like you mentioned. But I think, more seriously, I think, look, the fintechs or the insurtechs are not going to invest 2,000 crores of capital. On average, apart from one or two companies, that's the kind of capital between 1,500 to 2,000 crores to break even in India. And the break even typically is 12 years. Again, give or take a couple of years here and there. And a couple of companies might differ, but largely. So, I think it's easy to say that, I'll be a fintech or an insurtech and then I will do what companies are doing. If it were so easy, then I just think that it would have happened a long time ago. And so if you have a front but you're not going to be bearing risk, you're not going to be answering or answerable to customers and servicing. And when you look at the back book, when I joined this company 13 years ago, it was about 60% new business and 40% back book. Today, it's like 20/80. So the back book is like you have in the West, it's going to start becoming significant. And in a way, annuity business, not in the sense of annuity in the sense of the product, but just the back book generation. That's how the nature is going to change. And so customers and not just hunting, but also farming starts becoming increasingly important. And so I believe that a close partnership on win-win on how can we use. I was seeing an interview by Mr. Khara today, and he mentioned the same thing. So it's not, I think every financial services old world company, for want of a better word, is looking to partner rather than compete. And so don't see it as a threat at all. But I think it's symbiotic in terms of how we can use and how they can use. And it's there will be shades of gray.
Yeah, Tarun?
Yeah, so I generally agree with what Vibha's saying. We don't expect regulation to go slow on or go low on the requirement of capital and this way to service. The fixed cost of setting up a life insurance company is significant. It's not just the capital requirement, even otherwise. I think the answer lies in partnering. The answer lies in solving for what we can't solve for as life insurance companies. Don't forget that we are all legacy companies with clunky systems at the back end written in Baba Adam ke zamane mein types. And, there's a lot of stuff we can put around these clunky old systems. That is where a lot of work comes from fintech. Fintechs understand the consumer space and the capability of responding fast, which is not there in the large tech, but is there in the fintech and the insurtech. I think that's a space where we can surely partner because they're agile. The kind of technologies that they can choose to experiment and even be okay to fail, because there is going to be failures. Not everything is going to work. Today, when we run any pilot or any innovation, we typically don't run with one, but maybe two fintechs or insurtechs, because you don't know whether we'll be able to see the end of it together. So that is a big one. At the same time, companies like ourselves have to learn to be able to work with fintechs. And I'm talking here service providers. That is not an easy one, because the decision making also has to be agile. The culture of digital has to be there. So there is a long but hard journey that is there. And I think it's a partnership which is which is the way forward, and it can surely be achieved.
Thanks, Tarun. I think what Viva said, you were saying the same thing, echoing the same thing. Partnership is way forward. Let's hear the elephant of the industry in terms of size. Rajkumar of LIC, tell me. I mean, you need to make the elephant dance, or how you approach the new era, the digital disruptions in insurance.
Ms. Tamal, we are already using all the technology, including digital, and we are working on many other technologies also. But the question is about the fintech or the insurtech companies. Now, one thing is there that maybe the panel is knowing that our IT systems are 99% in-house. We have developed those systems. But the time has come when we are thinking that it's not that everything should be done by us only. So there are many areas where the collaboration can happen with the fintech and insurtech companies, and we are looking into that. But I also, at the same time, we believe that these companies will get stronger and stronger in the days to come. So the collaboration will be the most effective way of having a growth for any insurance company.
Okay, I get a feeling that you people have discussed among yourself how to answer this. but the question paper was never leaked, but everybody is writing the same answer. So let's see if Naveen Delani of Naveen Tata AIA, if you have any different kind of answer, like you yourself will change and disrupt your own company, and this is the way to take it forward, or you also believe the partnership model?
No, I don't think the question paper has leaked. I think the answer is universally true. That's why you are hearing the same answer, at least so far. So to keep it short, I think I firmly believe this is an opportunity for collaboration, not competition. And I actually think this is an opportunity for collaboration, not just between what we are calling legacy insurers and new world companies. I mean, most of us in the private sector have been around only for 20 years, and 20 years is a pretty short period of time. I would argue this is an opportunity for collaboration even amongst insurance companies. I think this is a point Vibha touched on, and I would like to amplify that, because if you look at protection gap in India, that is running at 83%, which means if every Indian should have 100 rupees of cover, he or she has only 17 rupees of cover. And this gap in 2015 was 91%. The gap was 91%. So in 6 years, we have brought the gap down from 91 to 83. Okay, terrific job done by the industry. But I think we would all agree we have a very, very long way to go. Second point, why I believe this is collaboration, not competition, is, look, we have to serve the consumer as she wants to be served, not how we imagine she or he wants to be served. Consumers want convenience. Consumers want to be served by multiple channels. Vibha touched on it. I want to provide the data for a minute. First half of 2019, the index for digital searches of term product was 45. 45. Let's take that as the baseline. When the first peak of the pandemic happened in September 20, it jumped to 89. When the second peak of the pandemic happened in May 21, when we had disaster, it jumped to 100, right? It has been the highest ever. What is the number today? 45. So we are back to where we were 2.5 years ago. And therefore, the point being that, consumer needs will evolve. Consumers' needs don't kind of move steadily just in one direction. Consumers prefer multi-channel, multi-ways of interaction. And therefore, the point that Yashish made, I mean, I don't know what his story is in terms of going physical, but I truly believe a multi-channel way of addressing the consumer rather than having this polarized debate of online versus offline is genuinely the right thing to do. Having said this, I think beyond distributor manufacturer debate, there is so much opportunity for collaboration with fintechs, with health techs. I mean, today there are companies which are innovating on figuring out your health data by looking at a 2-minute video. And this is not fantasy land, this is not science fiction, right? There are companies which have made tremendous progress in saying that if you show me a 2-minute video of a consumer, I will be able to tell you age, smoker, non-smoker status, I'll be able to tell you BMI, etc., etc. We are by and large stuck in the old world of underwriting. Can we work with these health tech companies and find a way to revolutionize our underwriting, which we can't do on our own, right? But we can work with them and provide a completely new offering to the consumer. So just a few examples, Tamal, to illustrate the point, but I firmly believe it is all about collaboration all around rather than artificially creating this scenario of competition.
Thanks, Naveen. Over to Kanan.
Thank you, Tamal. Though the question paper has not been leaked, I have the benefit of copying from all my colleagues officially, since I'm going last. So I largely supplement what my colleague said. So my belief, Tamal, is that each category of players, be it fintech or health tech or manufacturers, distributors, each category of players has a skill and relevance and a place to stay in their place because they are backed by certain kind of skill sets. For example, if you look at the manufacturers like life insurance companies, we have the capital and industry requires capital. We have risk management capabilities, a large back book to which we can cross-sell, and investment capabilities. That's important. Policyholder money has to be invested carefully. So these skills will continue to be with us. And the way to go is really partnership. And the good news, I would say that the industry has been built based on bedrock of partnerships. If you look at even today, the distribution of life insurance, probably 10% comes from direct business for the industry. The rest 90% is distributed through partnerships. So ability to work with partners comes automatically to this industry. So that's a good news. It's a heavily intermediated industry. So we'll have to bring it to bear when it comes to new age partnerships also. That's what we've been doing as an industry, and that's what we should continue to do. The only additional point I would say is that we should be encouraged to work even closer with the new age players like insurtech, health tech, fintech companies by actually having a skin in the game from our side as well. By that, what I mean is that we should be allowed to set up subsidiaries in that space so that there is a skin in the game for both us as well as the partners. Rather than saying that, I will take you as a partnership and then keep it as a loose partnership. Yes, it will work up to a point. But if you are allowed to entirely partner with the skin in the game, with the ecosystem, I think that is the way to go from here on. We should not have this artificial thing of 10% investment and you cannot have subsidiaries in other than insurance. So those kind of shackles, so to say, should be removed. Then we can really harness this whole skills of the partners to the benefit of the ultimate customer. So that's what we should be focusing on. So that's what I want to add to what my colleague
Yes,
said.
thanks, Kanan. It's a very valid point. In fact, this is exactly what in the previous panel also discussed about investment in startups. Of course, you added a dimension talking about having your own subsidiaries. So let's hear Yashish's story, like from pure play wave. Now you have started having branches. So what is the logic behind this? And can you just tell us your story very quickly?
Sir, we have to appreciate two things about insurance. Number one, it's necessary. It requires deep passion. Second, it's very hard. Consumers will not just buy insurance because it's available, right? So it requires a lot of, I'll give you one very simple example, right? As the pandemic happened, we all faced the pain. We all faced the pain because customers could not do medicals. We all faced it. But you saw what happened. A few of us grew, and a few of us, not anybody here, but a lot of people just gave up on the term insurance business, I would say. A lot of people just gave up. I saw so many distributions, same people we call insurtech, fintech, etc. They just gave up on it because there wasn't deep conviction, there wasn't deep passion that this problem has to be solved. And I think, what is our going physical? It's nothing more than understanding that to solve that particular pain point, this is a step which will take it further. And I genuinely believe longer term, value will not be added by just a pure tech or a data play. Value will be added through deep conviction in the sector that, look, people require this protection and it has to be done in a very circumspect manner. That can never happen without, the insurers, number one. But more importantly, whoever, I know today fintech and insurtech is nice to talk about. When we started, we were not called insurtech. We were not called fintech also. I think for the first 7 years of our life, we existed without being called insurtech and fintech. Today, we are enjoying the wave. But I think without passion, nothing will be built. That I can promise you. Eventually, it will get commoditized. If somebody builds a great technology platform, everybody will use it. At some point, somebody else will provide the same technology platform and it will get commoditized down to zero. Similarly, a data play. Because, I heard Naveen also say that, look, it's hard to get this data. And no, it actually isn't hard. The data analytics is not so hard, genuinely. Like, I think each one of us here has enough people in our own teams to do it. That's not the hard part. So I think I just leave it there. I think it will always require deep passion to succeed in this industry, and partnership is a must. Without that, you can't do everything yourself. This is a big problem to solve.
Yeah, Ashish, I just couldn't understand one thing is when you say it's the passion, are you using the passion word as a substitute for touch, human touch? That's what you meant?
No, I'm not using it. It's a deep pain. Unless, see, there are many ways to make money. You can become a real estate broker. You can do a lot of things. The fact that you get into one thing, you try to solve that one thing, requires a certain level of passion. And the fact that you keep doing it for decades and you dedicate your entire life to it, which is what every company here has done. That is different. And insurance requires that because it's not lending. This is not lending. Lending anybody can do. The difficult part in lending is collecting money. Platform are people coming to buy insurance. There's no customers. Customers don't walk in and say, I want insurance, please give me insurance. That doesn't happen. Who has that? Maybe LIC has a bit of that, but nobody else has that.
Yeah, you made your point. So, my question, there are many questions, but before that, let me at least have one more round. So quickly, maybe we'll start with Tarun now. As all of you agreed on 2 points that this is you are thanking COVID for this, giving the opportunity for transformation. That's what you said, all of you, in different language, but all of you said this is a moment of truth and this is the inflection point. You are transforming yourself. That's the first part. Second part, you said that digital disruptions you are all welcoming, and you have said the way forward is partnership. Now, my third round, and each of you, like Tarun, I'll start with you. Can you tell us, like, your processes, etc., changing, but in terms of products? Like, for instance, is the rural market? Anecdotally, I was talking to people, and I heard that they're seeing opportunities. There is sudden upsurge in rural markets, which I'll not name the insurance company, but this is we have never seen that. But now we are seeing that people from the rural markets, they are coming forward to buy insurance cover. The awareness has come. So I want to understand from each of you. Quickly, we'll starting with Tarun, and that's what are the newer products that's the COVID time that have taught you, and also in this, to increase that will increase also insurance penetration. We are continue to have around 3%, and we are pretty happy with that 3% of GDP. So it will increase that. And also as a subset of that, I was going through the number. What I have seen that most of you have reduced the share of ULIP ever since the COVID pandemic happened. In your thing is, in terms of your thing is between last 1 year, 1.5 year, the ULIP is shrinking in your balance sheet, if I may say so. So is it a sustainable trend or is it temporary phase? That's the subset. But first is, what are the newer products and the rural markets? Is it an opportunity? Tarun.
Yeah. So that's a lot of questions in one. So
quick, sir, about say 2 minutes each.
Sure. So see, I'll start with the GDP question. You will see I know this is your pet peeve, Tamal, in our private discussions as well. You will see this year onwards, and it's obvious in the stats, that the GDP penetration for us is going to go up because per se we are growing faster than the GDP. So I think that's a given. Whether it will continue or not is what you heard from the other panelists, and how we use the opportunity. And as I think Yashish capped it by saying that the passion behind selling insurance is going to be key for that. In terms of product, yes, the products become very critical to be able to, and I mentioned this earlier, to be able to get in all the spaces that are open to the life insurance license, which is namely 4, I would say, but currently 1 is not really available. One is the risk of living longer, the risk of dying earlier, and the risk of not being able to save enough for your long-term needs. I think these are the 3 key. We're hoping that with morbidity, there will be some more flexibility. And I think with the need of health being very clearly there, I think eventually it should be a matter of time that we should see that also. Now, within these 3 that are our stock basic needs that we are following, there have been a few undercurrents of trends that have helped. One, again, I touched earlier, the arbitrage between the fixed deposit rates being lower, and we are able to play the yield curve because of better risk products, risk arbitrage covers that we can provide. And we are the one sector we are able to provide today a better long-term guarantee versus what you see in FDs, which anyways do not look at beyond 3 years usually. That itself singularly has hit the ULIP market. So I'm answering your other question hidden in that. So that's impacted the ULIP market, and you would have seen the guarantee products having taken that place to an extent. For us and for quite a few others, you will see this trend of the retirement bucket also getting met more and more, because at the back end now, there is enough financial risk coverage products that are there. We can do better. And if you ask me what are the innovation that can happen in products there, underlying any guarantee product, there has to be bonds. There have to be different kinds of instruments available for handling our risk covers, which is something we hope the RBI and the IRDA can work together. And I think that's where it will help us move to an extent. In most large markets, you will see tax arbitrage and tax benefit as being the key. Now that, if you realize, has largely been removed from the life insurance sector. So Tamal, you know that ULIPs now about 2.5 lakhs have tax benefit not being there. We don't have any special dispensation in taxation anywhere. Now, if you take a look at that, and versus that, if the insurance sector has been able to maintain itself, and now we are growing, I think we are already doing quite well. That's the way I see it.
Okay.
And that's my 2 minutes. I'll leave it to you.
Yeah, let's say Naveen.
So I would say the opportunity is tremendous. Today, life insurance companies are positioned as payers.
Hey, Naveen, can you just give us some evidence instead of just saying, yes, there are opportunities, but every year we say that there are opportunities. But
no, I'm saying that today
this, like in certain rural pockets, etc., etc.
Yeah. See, the point I'm trying to make is on product innovation, we are seen today as payers, right? We pay a claim, and we have had some products for the last 20 years for the private sector. But when you look at other markets, I'm looking at other Asian markets, there's an opportunity to partner customers in their health and wellness journey. And IRDA has actually enabled the first step of this. So today we have the opportunity as life insurance players to manufacture health insurance products where the premium can be flexed up and down depending upon the health and wellness of the customer. There is a paper IRDA has come out with, a draft paper, which allows potentially that to happen on other life insurance products as well. So first specific example of innovation, we can move from purely having plain vanilla products to supporting customers in their journey of health and wellness. It is not academic. It's happened in other markets. I hope it happens in India in the next 5 to 10 years. The opportunity is here and now. Second, on protection, huge opportunity already that we are seeing to bundle life and health. It's taking off for a large number of companies, including for us. Third, pre-retiree, retiree segment, pension opportunity on an insurance platform, huge opportunity across all kinds of markets, semi-urban, rural, metro, across all kinds of markets. Fourth, the traditional opportunity of saying ULIP is one category, protection is another category, getting dismantled. Today, you have an opportunity to bundle protection products on a ULIP chassis, which give the customers huge protection needs, as well as give them upside of the market returns over a long period of time. Fifth, digital. We all talked about digital so much. Digital has forced the innovation on sachet products, whether it is short-term covers, whether it is simple health covers, right? All of this is today possible on a digital platform. So these will be my top 5 picks for product innovation. And as we go along, the opportunity will be even more as we move forward to cover customers geographically, by income segment, as well as more importantly, by the needs that they have. Back to you, Tamal.
Thanks, Naveen. Let's hear Kanan.
Yeah, thanks, Tamal. So your first question regarding the markets, we do see demand across the board, not just rural, including in terms of large cities and urban markets for deepening. There is a great opportunity. In fact, I would say that the industry can do a lot more in terms of growth in number of policies as against growing only premiums. So I think the opportunity is both the width as well as depth for the first question. The second question, you talked about newer products. We do believe that we are seeing a great opportunity today. The pre-retiree segment, which Naveen talked about, the deferred annuity is doing quite well. This is a time where people are seeking certainty. So to that extent, over the last year or two, we have seen guaranteed products do well, and it is supplemented by the fact Tarun mentioned of the bank deposit rates going down. So I think this will all come in phases. Today the guarantee products are doing well, and tomorrow it could be ULIP. To your question specifically on ULIP, I do believe that industry generally would go by the consumer preference. In some quarters and some years, ULIP may do well depending on the market conditions. In some other times, the guarantee products may do well. The good news is that as an industry, we have a suite of products to meet any requirement of the customer at any point in time. You also talked about what are the new products which are emerging. We do see a great opportunity in the group term business because large employers are getting very focused on enhancing the cover for their employees, given the pandemic. Not just by the number of employees, but also coverage per employee is being enhanced. And we do see a great opportunity for our industry in that space. So these are some of the areas where the products are doing well, apart from the innovation and the other aspects my colleagues mentioned. The last point, you talked about penetration, 3%. Once again, Tamal, I would make one more request this year, once again, that as an industry, we have done an exceedingly great job of sum assured. Please don't look at only the premium collected as a percentage of GDP. Look at total in-force sum assured. It has gone up in financial year 2002 of about 11 lakh crores to 188 lakh crores. It is 15.5% compounded story for 19 years. And today, if you look at the sum assured as a percentage of GDP, we have gone to 95% as against 50% 19 years back. I think, we focus a lot on collecting monies from the customer. We should be focusing on, in the event of calamity, what will you give back to the customers? And that is what the in-force sum assured. Yes, it has got a component of their own savings and it has got component of investment income. It also has a component of protection. But this is, I personally believe that industry has done a phenomenal job in the last 20 years. The last point, again, I will put all this together to say whether it's an inflection point or not. I sort of resonate with Vibha when she said that it is upon us to take advantage of this. I would go one step back to say that inflection points are always determined in retrospect and in hindsight, Tamal. when the change is happening, you don't know whether it's an inflection point or not. Only in retrospect, you see whether it is sustained, then it becomes an inflection point. So to that extent, I would say that this is a period of drastic changes which has happened during the pandemic across all dimensions. We talked about digitalization, we talked about sales, we talked about servicing, we talked about employees. Drastic changes have indeed happened. Whether they will sustain to become an inflection point, only time will tell. And again, it is upon all of us, the customers, companies, the distributors, the employees. So that is where we'll have to make it an inflection point together as a set of stakeholders in this industry. Thanks, Tamal.
Thanks, Varun. Before I let you go and shift to Yashish to give his comment, just tell me globally, when we talk about insurance penetration, I mean, what is the accepted benchmark? Is it my understanding is it the premium, not sum assured? Is that correct?
See, it depends on the country you look at. You know, in several countries, protection is extremely prevalent. In our country, if you look at last 55, 60 years of insurance, insurance evolution, we do see largely it's a savings-dominated market. A kitty of savings becomes a proxy for insurance. So in several other countries, pure protection has been prevalent. So I would personally say that it should be a combination of measures. Looking at the coverage of population, I think that is one area where we can do a lot more as a country. Then sum assured, as well as the premium income. I think we should get an index having all these factors because each one serves a particular need. So that's what I would say, that 95% can still be higher. We have several countries where it is 200% plus of GDP. So we can still get there. It's a long unmet need yet to be satisfied by the industry.
Fair enough.
It's a combination of all these factors.
Yeah, I think one day we'll see a different kind of index that you are talking about. So let's hear Yashish quickly. 2 minutes, your take on this.
Sir, I don't have very different views from what Kannan sir was just mentioning. My view is the industry needs to really shift focus towards sum assured because that's the coverage that the consumers derive, and that has done very well over the last 10, 15 years. And that's the importance of our industry. See, ever since I entered this industry and I entered insurance in the first place, all I have seen was life insurance was much bigger than general insurance to start with in those days. Of course, general insurance is catching up. But if you ask me fundamentally, where should more premium go? Should it go towards protecting life or towards protecting health? I genuinely believe it should be towards protecting health. I'm not making that up. I've got all life insurers here. But I genuinely believe more premium should go towards protecting health than life because that is how I see it. You know, for a similar coverage, there is more cost on healthcare than on life as of today. And, so my basic point is the moment you take the savings angle out of it, you see a very different picture. And I think that part has been growing quite fast. Now savings will grow. You are competing with banks, you're competing with mutual funds. And I think the industry's done a phenomenal job because it's almost impossible to compete and still it's been able to compete and grow. I think, and that both the private players and the, LIC have done a phenomenal job. For us also, the highest growth category this year is savings. So I'm not, saying anything different, right? Whether it comes from your repatriation part, whether it comes from your pensions part, whether it comes from your, planning for kids or, kids' educations, marriages, or, there are various, or annuities, which is just people putting their monies into annuities, lots of ways. But that's the fastest growing area for someone like us who, started off being totally about protection. So, life brings you around a full circle. And I must mention this. I did not expect the industry to create so many phenomenal products on the savings side because it's so difficult to compete with the banks and mutual funds because they have a pure product and the customer actually is not worried about the risk component there. When he's buying a savings product, he's buying the savings product. And still, one after another, the industry has come out with products which could compete. And remember, they have limitations on where they can invest because 25%, central, 25% state, et cetera, et cetera. And then they have, so there are a lot of limitations, but still, and almost no more any,
Thanks.
Significant
Thanks, Yashish. Just, I'm sorry for interrupting because we are pretty running out of time. So Viva, your turn. The newer products, anything that you're seeing, new trend, new products?
So, so we've had a amazing journey over the last 10 years as an industry, right from term to guaranteed products to deferred annuity to cardiac care and cancer care and so on. And we'll continue to do that. With even a little bit of relaxation, we'll be able to come out with a lot more in terms of white spaces. Also, then we haven't even started bundling in Protect. We haven't even begun looking at bespoke products. However, to be a naysayer, none of this really we can't really unleash the full potential unless two or three things. One is that data is the oil. The way credit offtake happened and could not have happened without credit bureaus and this loan in a few seconds and so on. If we don't get enough data of people, both in terms of financial data, KYC, as well as medical data, we can keep looking at just, the overbanked will be the guys in our top 10 cities. Rural, you mentioned, Tamal, nothing we can do about rural unless we have that data on people. Even our death records, for example, are just digitized only in the top 10 cities. So what are we even talking about? Unless all of that is there, that transparency will bring about my next point, wherein if we can have differential pricing, because every risk largely can be priced for. And if we don't have the support of reinsurers to the extent that we want, then we need to understand that risk better to see whether our balance sheets can carry that risk. You can't do this in the blind, especially more and more listed companies. So the easiest way is to say, no, I don't understand this business. This is too risky. And so I will step back, which is exactly what the sector has gone through. So for us to be able to expand, we need to be able to get that data and to be able to share that data through, exactly like I said, with bureaus. Risk-based capital will help us unleash some of the tied in capital that against which we can write business without having to go to the market to raise capital once more. So unless structurally some of these things are done, we'll continue to mine more of what we are mining today. But really the opportunity is outside what we're doing today.
Thanks, Viva. I think that's one thing everybody, all of us agree that data, and that's where the fintechs play a critical role probably. A person like Yashish probably have a data mine which he can share with you, and because you people have been talking about coordination and cooperation. So let's, the last word is none other than Rajkumar from LIC. So when it comes to size, you are the biggest, 3/4 of the industry. When it comes to products also, but tell us during this COVID period, is there any new suite of products? Is there anything new you are seeing in terms of demand from different geographies? Anything you want to share?
Tamal, I agree with the earlier speakers on the views they had expressed, but I have a couple of things to just discuss. One is the products are required to take care of the life cycle needs of a customer. Life cycle needs go on changing. Now you mentioned about the ULIPs also. I mean, one particular company, it may not be focus area, but other it could be focus area for us. For example, because we were out of this market for very long period because of some strategic reasons. But when we are looking at the life cycle of a person, the median age in India present is 28 years. So the need at present will be totally different than after 20, 30 years, when probably, since there is no social security system in India at present, so probably annuities, the deferred annuities will be a flavor also. At our end, we are trying to look into these things, that what kind of products can be launched. We refurbished our one product called Jeevan Arogya, is a health product particularly. We are also looking at that cancer product has done very well, but probably we need to look at a diabetic product also. We are in the preparatory stage at present, but at the same time, the geographical requirements are sometimes very different. In the rural areas, particularly between the geographies also, east and west, we have seen that. And we discussed, we believe that probably we are reaching a stage where differentiated products may have to be launched for different geographies also, that market may demand in future.
Thank you, Mr. Rajkumar. So that brings us an end, but not exactly. I have one more question for you, sir. Only for you, not for anybody.
Okay, sir.
I mean,
I know the question. This is a leaked question.
I have to ask you, and it's your prerogative to answer or not to answer, because everybody wants to know about your IPO, including your competition or the industry and the investors and all. And among the audience also, there are investors from different geographies. So if you want to share, could you tell us anything in terms of timing, in terms of anything which is not in public domain? Welcome.
No, sir. Whatever is in public domain, I can talk about that only because now there are certain restrictions which are already there. Because we are shortly going to file the DRSP, and certain things we may not be able to talk about. But yes, about the timing, in the Honorable Finance Minister has said on the platform in the Parliament itself that the IPO will hit in the fourth quarter of the current financial, and Department of Investment and Public Asset Management, Ministry of Finance, DFS, Department of Financial Services, LIC, BRLMs, and all others persons, I mean, particularly Milliman and ENY, who are our implementation advisor, and Milliman are the reporting actually. We are working towards that. As of now, I can only share that whatever timelines we have decided, we are on that, maybe a little ahead of them. And we are very sure that we are going to hit the market in the fourth quarter.
Okay. Thank you, Mr. Rajkumar. I think
sir.
that's, I mean, I can understand the regulatory constraint that,
right, sir.
That you have. So thank you for, so LIC IPO is very much on, and you are actually could be even ahead of schedule.
Right, sir.
So we are running out of time. There are many questions, but many of them have already been answered during our discussion, talking about Policy Bazaar, competition from Policy Bazaar. Gentleman called Hrishikesh Kalita spoke about that, etc., etc. But let's have a one or two questions at least, because no, it talks about, I'm absolutely ignorant about this. As per amended section 45 of the Insurance Act, policy liability cannot be questioned after 3 years, even on grounds of fraud. Has the industry taken any steps to get this anomaly rectified? The question is from M. Vasanta Krishna. Anybody wants to answer this? No? Section 45 of the Insurance Act, policy liability cannot be questioned after 3 years, even on grounds of fraud.
So this
Okay.
this is I think one area which will be concerning all life insurers, because we are having a feeling that some of the claims are not getting reported within 3 years. It is possible, sir, and there has to be some flexibility in interpreting this clause. At various forums with the ministry also, we have taken this issue, and probably it has been discussed with the regulator also, that we need to look at differently. The frauds can happen in this fashion also. The death is happening at say 2 years and 9 months and getting reported at 3 years and 1 month, and you cannot question on that. But still, I think the industry has to take up this issue because nobody should gain with their fraudulent intentions. And at the same time, we need to take care of the interest of the policy. So there has to be a balance between both.
One question is this: it talks about there's a limit. Life insurers have limited regulatory scope for writing health business. Should there be a level playing field for them on a par with general and health insurance? I think Viva, you mentioned this, or one of you mentioned this, Viva or Kannan. So would you like to answer? Yeah, Viva?
Yeah, sure. So there was a committee formed, and unfortunately, it's been over a year since the report was submitted. We absolutely believe the insurance provisions did enable us to write indemnity products on health, and a lot of us were doing that. And this was withdrawn. So we do feel very aggrieved. And also worldwide, health does sit with, its health is closer to life insurance than motor insurance, for example. So anyway, I think the recommendation has been submitted, but we would like to have a positive response on that, so that there can be more product innovation.
Many more questions coming up, but unfortunately, we just take two quick questions, 1 minute answer each. Whoever wants to do this, they said that about there's news that reinsurance rates are going up. Now, will the term insurance policy premiums increase significantly because of this? Kanan, Tarun, Naveen, whoever wants to talk. Term insurance policy premium, will it go up?
Yeah, so I can answer.
Yeah, please, quickly, Tarun.
Well, Kanan, do you want to take a go at it?
Yeah, I just wanted to say that Yes, it is likely to go up. We have already talked about it in the public domain that the discussion with the reinsurance companies are going on. The idea would be to further negotiate and see how much we can pass on to the customers. So that is an exercise which is currently on, but it's likely that the prices will go up. The idea is to make sure that the right profiles get the right pricing. That's what the discussion has been going on with the reinsurers. Tarun, go ahead. Sorry.
Tarun, you want to add, or let's, okay, nothing to add. So let's, last question, it has two parts. So let's Tarun answer one part, and anybody, Rajkumar, Naveen, Yashish, whoever wants to have another part. Is this, there are two parts to this question. The questioner is Rimpi Bhatia. The panel has mentioned that insurance searches have come down. So what, is there any way to reinforce the to the public the message of the need for insurance to make the more searches? That's one part of it. Yeah, Yashish will answer. Second part is this. Probably whoever Tarun or Rajkumar, whoever wants to add is this. Sir, I'm just quickly saying that so that you can quickly answer that. How do we make faster claim settlement? We understand the same person. We understand that it's happening in hours, but will it happen in minutes?
So just
Yashi's first question, and then second question, whoever wants. Yeah.
So Vibha ma'am mentioned that Google searches are somewhat down. I don't think she mentioned that the industry searches are down.
Okay.
And I have a very simple thing to add there, and I spoke about it. Google is a very, very big brand, but Google has not spent 2,000 crores talking about insurance. That's what we all have done, right? We have done maybe 1,000 crores plus. The industry's done a few thousand crores. We have all gone out and spent that money and said, guys, you need to buy insurance. And that's why, that's the point I was mentioning, that, you know, if you have passion, it doesn't matter what your scale is. Eventually you will be fine. Sorry, the second one.
Yeah, last question is this, faster claim settlement. When do we see claims are settled within minutes?
So
anybody?
Maybe let me just take that.
Yeah, Tarun, quickly.
Yeah, Rimpi, we are not really expecting claims to get settled in minutes. It's life insurance. It's more important that claims are handled in a more convenient fashion. And I think convenience is where the focus is going to be, not minutes or hours. It should be convenient and quick, but as is appropriate.
Okay, so it's not a bank loan that 1 minute loan is possible, but 1 minute insurance claim, because the risk management is very different. So that brings us to the end of this life insurance panel, which is the end of day 7 and panel number 8 of Business Standards Big Bang Summit. So what are the key takeaways? One, yes, indeed, this COVID is an inflection point. It's transforming the industry, and industry is up to the challenges. That's point number one. Point number two is this: industry, the traditional player, fully aware of the the reality of digital disruptions. They are not seeing it as a challenge. They are seeing it's actually the way forward. So they are going for more innovations and, of course, more coordination and more collaboration. And yes, industry exists for the consumers. So as the consumers evolved, we are seeing more and newer products. Apology to the audience. There are many more questions we could not take. And thanks to Tarun, Yashish, Kanan, Rajkumar, Biva, Naveen. You represent, I don't know, 70, 80, 90% of that, probably the life insurance industry, 80% at least of the life insurance industry. So thank you for being with us at this Business Standards Summit, and have a very good evening. Thank you from my side. Goodbye. Manish, over to you.
Thank you, Tamal. Very wholesome discussion on insurance. Many thanks to our keynote speaker and all panelists for that. Thank you, HDFC Life, Reliance General, and Jana Small Finance Bank, our partners. Thank you, dear audience. Tomorrow is Mutual Funds Day. We will be back at the same time, 4:30, with 2 panel discussions with heads and CIOs of mutual fund companies. And the finale of BFSI Inside Summit is coming up on Wednesday, 4 p.m. with a keynote by RBI Governor and a panel discussion with big bankers. Do join us. That's all from us. Thank you. Have a great evening.